This is Bazaar Morning Call. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Prashant. With me, my colleagues Sonia and Nigel. Guys, hi. Good morning.
Hi, good morning, Prashant. Good morning, Nigel. And it's T-1, right? The day before the union budget. Of course, this time it's a vote on account. But be that as it may, the nervous energy perhaps is rising. Also, we saw selling in late trade yesterday, and that, I think, derailed the bulls a little bit.
Well, and the big global Q as well. We'll know the outcome from the Fed tonight in terms of commentary. So, plenty lined up.
It's going to be a pack tomorrow, right? I mean, tomorrow morning, FOMC, and then by 11, we'll hear from the finance minister.
And then you have expiry, weekly expiry.
Weekly expiry as well.
So all the Red Bull and the coffee and the energy drinks and everything, keep everything ready, right? Starting today.
Absolutely. Well, you know, let's just quickly tell you what you need to know as we begin another session. So yesterday was a bit of a disappointing day if you're hoping for markets to build on what we saw on Monday. I mean, we saw that 400-point massive move, right? It was unlikely, and we said this yesterday morning as well, that, I mean, the message was not to chase the open. Perhaps you will get a pullback, but again, you know, the extent of the moves are what is surprising. For example, on Monday, you expected a bounce, but 400 points, that seemed excessive. And yesterday's 200-point pullback also on the other side seems a little excessive. I mean, so exaggerated large moves is what we've been getting over the last 2 days now. I'll come back to markets and levels, etc. in a bit. US equities pulled back. You've got the Nasdaq, which was down about 0.75%. Not very much positive, sort of, if you're looking for day-on-day reinforcement from the US market, that's not there. The Russell was down about nearly 1%. The 10-year yield lost 3 basis points, about 4%. So it's once again flirting with that 4%. It's psychological, but it's important. I mean, are you 3 point something or are you 4 point something? That matters. Dollar index cooled to about 103.40. It's come off about 0.25% last night. You had, one indicator of the jobs market, the Joel's job openings, which beat expectations. March cut odds. I mean, the odds that the Fed will cut in the month of March, that's now cooled to about 35%. So results are coming through. It's a big week for earnings in the US, and Microsoft reported numbers. They were largely okay, but Google is the one where ad revenues missed expectations. And the stock actually post in after hours trading, the last I checked was down about 4.5% or so. That's a big one, right? And ad revenues are very sort of classic indication of how well the economy is doing. Companies want to spend to expand. They want to spend more on advertising. Now, there is the FOMC decision tonight, and there's no change expected as far as rates are concerned. But as I said yesterday, the hiking bias perhaps will be removed from the statement. At the same time, maybe in the commentary, in the press conference, the Fed chair will go out and say that, we're in no hurry to cut as well. So no hikes, but no hurry to cut as well. That's essentially the consensus expectation the market is going into this event with. Now, the interim budget is tomorrow. Expectations are extremely low. And we heard it from the finance minister, no less, late last year, that nothing spectacular is expected since it's a vote on account. But it's an important event. Will the government reaffirm some of its larger goals in terms of infrastructure spending, and those kind of things? That's what the market will be focused on, but we'll get to that in much greater detail as we go along. Now, let's just circle back to the levels here, right? The Nifty could not sustain above the 61.8% retracement of the pullback that we saw, and that was the first signal early on, and that number was, 21,700 plus. That the indication was that, maybe the pullback is going to get a little deeper. It did. The Nifty's high yesterday at 21,813 is an important resistance point then, which perhaps the market will need to sort of take out for the market to feel bullish once again. We've been ranged. I mean, actually, if you take a look at the day before yesterday's candle, it's a big red candle, and yesterday's candle also big green candle, and yesterday it's a big engulfing candle. You've eaten into almost 61.8% of Monday's move. So in that sense, it's a bearish, clear, technically bearish signal. Closing below the 40-day exponential moving average is what will, I think, give confidence to bears that perhaps, further downsides are coming. That number is at about 21,275. We're at about 21,500. So that's the first indication which the Nifty needs to get to. For the Nifty Bank, a break below the recent low of 44,429 will confirm downsides. That's not the low, yesterday, but the recent low a few days ago. And on the way up, yesterday's high, which is 45,678, will be the important marker which the market needs to take out. We'll see how it goes. And further upside, 61.8, etc. But that's further out, even compared to where we left off. If Nifty will come up on your screen, I would say today once again is a do nothing kind of a day because you got you got too many big moves, at least on the index level, and then tomorrow you've got the budget and the FOMC reaction, etc. So no real advantage to trying to be too cute and trying to make money, at least today. At least on an index level, that would be the advice. Sonia.
Oh, absolutely. And the selling picked up in late trade yesterday. Yeah. So there was some nervousness in late trade, something that perhaps you can't rule out today as well. It's also important to point out the flow situation, right? Because there was large FI selling yesterday. Almost 2,000 crores was sold in the cash markets. But I have my eye on many stocks. I think one of the stocks in focus today will definitely be Dr. Reddy's. Good set of numbers coming through. And it's an all-round beat for them. Not just the US business, which was strong because of Revlimid generic, but the European business also has picked up. So Dr. Reddy's will definitely be on my radar. L&T is in focus. It was a strong order inflow guidance. In fact, they've raised their order inflow guidance for the full year. However, the earnings were a bit of a miss this time. Now they're talking about ending the year with an order inflow growth of 20% plus. And that is something perhaps that the street may definitely like. Now, in the broader markets, I'm watching out for names like PB Fintech. This is the first time that PB Fintech turned profit positive, and it was a very strong operational performance as well for them. In fact, the entire new age tech companies could be on your radar. More on that later. But it's also a big day of earnings today. You have a lot of large caps. There's Maruti, Sun Pharma, Ambuja, Dabur, Godrej Consumer. So we have our hands full. And there was large buying by domestic institutions yesterday. So DI has bought about 1,002 crores. Remember, this market is not too far away from the all-time high. The Nifty is barely 1.2% away from its all-time high of 21,800. So the bulls have their grip firmly on this market. It's just a couple of these big events that need to get out of the way. Let's see how things play out. But for now, it's not a bad outcome. Many individual stocks in focus.
Well, that's right. I think the headline index, you want to wait and watch. But there are plenty of stocks and sectors as well that are getting opportunities. And that's precisely what happened yesterday. So you'll say, well, yesterday wasn't a great trading session. Well, take a look at some indices. The small cap index, that was an outperformer here. The RELT index as well, that did do pretty well in trade. And the PSU banking index, on the day that the Nifty saw a sharp decline, you had these indices that were relative outperformers. So that's telling you there are still plenty of opportunities in the market. In terms of what happened yesterday, well, the institutions, they were net sellers by close to 1,000 crores. And there appeared there was more unwinding of positions on the Nifty futures. So there was lightening of positions, both on the long as well as on the short side. And that's what the FIs did as well, though they continue to remain net short with close to 76% of their positions on the short side. Then the options data, the call writers, they came back into play. They were writing aggressively. While the put writers, they were running for cover yesterday. We saw some unwinding even at the 21,500 put in yesterday's trading session. Because of the aggressive call writing and unwinding on the put side, you have the PCR that's come down to around 0.82. As a marker, you'll want to watch for it to go to sub 0.7. When that happens, we have normally seen a bit of a bounce. So that's one technical marker that you'll want to track. But the Nifty is facing aggressive, resistance at around the 21,800 to 22,000 mark. And I say this because the 21,700 call yesterday was very, very active. Big spike up in terms of open interest. The premium came down from around 200 rupees to around 80 rupees approximately. So that's one reason. That's the options data. The second factor is the technical reason. The 61.8% retracement of that correction from around 22,200 to around 21,200, well, that comes in this vicinity of around 21,750 to 21,800. So that's why that's a crucial level. And the bears, they look to defend this mark of around 21,800 to 22,000 odd. On the downside, though, support comes in this vicinity of around 21,100. I say this because you have the 50 DMA that's there. Few sessions ago, we went to around 21,150 and we bounced off that. So that's the market looking at the downside. Today, the index I like to look at actually is the Nifty Bank. Why is that? Yesterday, it was a relative outperformer. It has the weekly expiry that plays out today as well. And yesterday on the day, when the Nifty was down close to around 1%, you had the Nifty Bank that was more or less stable. Month to date, it's underperformed by close to around 5% approximately. It also defended the 100 DMA, in yesterday's trading session. That's what I'm talking about, the relative outperformance that we saw yesterday. And overnight, NASDAQ was under pressure and Alphabet's pulling down the NASDAQ futures as well. So I would like to see whether or not the Nifty Bank can go ahead and see some bit of outperformance or maybe hold one end up because it's been a relative underperformer. But yesterday, it showed some signs that maybe, in fact, it may want to consolidate or try to move a little bit higher from here on as well. But Sonia, you told us a few stocks that you're tracking. There's another segment you're tracking, the new age theme.
So after what PB Fintech did, I just looked at some of these companies, right? And if you look at it, PB Fintech, of course, will be in focus. It's turned profit positive for the first time. And it has the operational performance is very strong. But apart from that as well, if you look at what's happening with others, say Zomato, for example, Bernstein today has raised their target price on Zomato to 170 from 154 earlier. They talk about the twin engines delivering both Blinkit as well as Zomato. So that's something to watch. Delivery, if you look at the stock performance in the last 1 month, Delivery is up 10%. And, the selling that we've seen in Delivery, that perhaps is getting absorbed as we speak. And something like a Nykaa as well, right? I mean, it hasn't had a great run, but in the month of January, it hit a high of 193. So I'm watching out for some of these new age companies, new age tech companies. Maybe there's some buying interest that has come back here. But let's also get you some money market views this morning. First up, we have Kunal Sodhani of Shinhan Bank, who says that strong US labor market and consumer confidence contrast could affect the Fed officials' rate cut forecast. He says the Fed is broadly expected to hold rates steady today, but markets will be looking out for a dovish pivot from Fed Chair Jerome Powell to reignite the rate cut hopes. He says the dollar index is finding resistance at 103.8 levels for the USD INR. He also says 83 to the dollar acts as a support, while 83.25 is a resistance.
On bonds, we've got Neeraj Gambhir of Axis Bank, who says that bond yields initially traded higher on high oil prices led by escalating geopolitical tensions in West Asia, but later cooled on reduced borrowing by the US Fed and good demand in weekly auction. He says curve traded with flattening bias as longer tenor bonds saw strong demand from insurance companies. For the rest of the week, he goes on to add, market will take cues from FOMC and the budget. He expects the 10-year to trade between 7.1 to 7.2%.
Well, we've got a lot of stocks that we're tracking for you in our special Top 10 segment, but let's run you through the list. We're looking at TCS, Mahindra Financial, PB Fintech, Kochi Shipyard, as well as KEC International. All of them will be reacting to positive news flow, while it's even Stevens yet again. On the negative side, we have L&T, Dr. Reddy's, SRF, Star Health, and Voltas that will be reacting to negative news flow.
All right, Phu Ken Yap is Senior Investment Strategist at Standard Chartered. He's joining us. Phu, great to have you with us here. Thanks very much. So should we expect a meaningful change from the Fed tonight? And what would stand out for the markets?
Yeah, I think our expectation is that pretty much with what the consensus is saying, that it'll be a pause. Our expectation is that for this year, we're looking for about 5 rate cuts or 125 basis points. But most of that is going to be loaded in the second half of the year. In terms of what we're going to watch out for in the Fed, anything he says about the timing or the magnitude of the rate cuts is going to be very critical. I think March, at the moment, the probability is less than 50%. But if he says anything to the effect that still keeps March alive, then that could be something that's interesting. We still have 4 significant data points, I think, before the March meeting, 2 employment reports and 2 inflation prints. So that's still something to watch. And also, this back to the market at the moment, pricing in 5 cuts for the year compared to the dot plot from the Fed back in December, showing 3. So there's a bit of divergence here. Again, how much will he push back? I think the market pretty much sees 3 as a minimum kind of rate cut that we'll be seeing this year. But if he says anything to the effect of pushing back against that or pushing hard against expectation for 5 rate cuts, I think that'll be significant in terms of what to watch from the Fed and Chair Powell today.
Oh, so you're saying that there won't be any rate cuts today, but any indication of how many rate cuts could come through is something that could perhaps affect the market's mood. Got it. How are you positioned in a market like India? We have a big event upon us, the union budget. Do you have any expectations from an international investor standpoint? And in general, what's your view on India?
Yeah, we do like India in the long or medium term. We've got it as a core holding for investors. But, we looked at the one of the trackers we look at is the technical indicator for investor diversity of fractals. And it's showing that it's actually a bit stretched in terms of investor positioning for global equities and for India as well, and for US equities and a few other sectors. So, in our latest weekly report, we've been advising investors to trim a little bit of the equity holdings. They've done well year to date, and we're still overweight on a 6 to 12 month view. But in the very short term, just technically, there's concerns whether it has gone too far and too fast. And if we look at this diversity indicator, it shows a bit of a crowded positioning. So we are thinking that there could be a chance of a pullback. It would make sense that investors who have benefited and fully invested, that they do trim out their holdings and still be able to maintain exposure over the next 6 to 12 months, as we do still like global equities for 6 to 12 months.
All right, folks. So if not India, then where? I think in the past you've spoken about the Korean markets that you liked, and I think some of those developed markets as well was something that you were favoring. I think US as well as the Japanese index. If that continues to remain your preference?
Yeah, no change there. No change there. We still like the US. We like Japan, and within Asia, you're right. Yeah, we like Korea as well. Obviously, US very much. Earnings is a big focus at the moment. In Japan, we think we saw the tax reforms in Japan in terms of the incentives for local to invest in a tax-free manner. They increased that allowance, and I think that has attracted some domestic flows. So that's positive for Japan. And internationally, we think the corporate governance improvements will continue to improve that as well. And in Korea, I think we still expect the semiconductor cycle bottom to be behind us. And that will be beneficial for Korea's stock market. There's mixed news out there as the companies are reporting as to the timing of this cycle, whether it's too soon or not too soon. But we do think that over 6-12 months, Korea can benefit, as we do expect 2024 to be a year of rebound for Korean earnings.
Okay, all right. We will leave it at that. Thanks a lot, Fook, for joining in and giving us your quick view. That's the word on the global markets and how you should approach big events. But let's take a quick break. On the other side, so many stocks to talk about. Big numbers that have come through from the likes of L&T, Dr. Reddy's. More on that in a bit.
Insurance.
Welcome back. Our research team is standing by to help you with the list of top 10 stocks. First up, we have TCS that we're looking at. Reema's here to give us the lowdown. Reema, morning.
Hi, thanks so much for that. So TCS announced yesterday that they've expanded their partnership with one of UK's largest insurer, Aviva, for 15 years. So Aviva and TCS have had a long-standing partnership which spans close to about 2 decades, and this partnership has been extended for another 15 years. Now, according to Mint report, the size of this deal could be $2.5 billion, which is spread over the next 15 years. We've not independently verified it, but it could be a potentially very large deal. That's what the reports seem to suggest. So it's good news for TCS as it bags a big deal, which will boost the UK revenues for the company. Back to you.
Okay, all right. Thanks a lot for that, Reema. Well, Vivek joins us to tell us about L&T. Vivek, the numbers a little bit subdued, but the orders, the commentary on that was pretty good.
Well, absolutely right. A mixed bag. And what's actually been happening as far as L&T is concerned is that, and this story is repeating for the past several quarters, number one, operationally, it's been quite subdued. Execution is good, but operationally, because of the fact that the company is continuing to go ahead and execute on legacy orders, which were lower margin orders, this is something that's going ahead and impacting the core P&M, margin. But order inflow, number one, the guidance as well as the order inflows that the company is receiving, especially in the hydrocarbon segment from the Middle East, is something that remains quite strong. Let's take a look at the numbers. Number one, revenues much above the CNBC-TV18 poll on the back of strong execution. But the margins coming in at 10.5% versus our poll of around 11% is a significant miss, and this continues to remain a disappointment. Profitability on the back of that was below our poll. But what are the key highlights? We attended the media call yesterday that L&T held. Number one, the company is likely to end FY24 with an order inflow growth of over 20%, and the earlier guidance was just around 12%. Largely expected, but still, it's a significant beat to what the company itself was expecting at the start of FY24. Along with that, when you're talking about the revenues, the company is expected to end FY24 with high-teen revenue growth. What they had guided for was 12 to 15% growth, so likely to go ahead and beat even that. But the core EBITDA margin guidance, they started the year with 9%, then they trimmed it to 8.5% to 9%. Now there's been a further trimming down of that. 8.25% to 8.5% is what the company is expecting. So on the back of that, expect some weakness in L&T today, given the fact that the stock has run up quite significantly.
Okay, well, Vivek, thank you very much for that. Coming back to you for more in a bit. But Dr. Reddy's was the other big number which came out. Ekta's got details on this one. Ekta, hi, morning.
Morning. Well, very interesting set of numbers because, when Dr. Reddy's reported their numbers, there was nothing wrong with it. Extremely strong beat for Dr. Reddy's in the previous quarter. Revenue up around 7%. Street was anticipating a 2% growth. EBITDA has come in at over 2,100 odd crores, which is better than expectations. Margins 29.3%, better than expectations, and profit as well. Now, the main reason for the beat was the US sales. US sales came in at over $400 million versus $382 million Q-on-Q and versus $355 million in terms of an estimate. So that's the kind of alpha they reported in terms of the US sales. India, strong market for them, but it was subdued. It was up only around 5% in terms of growth. The reason why I expect Dr. Reddy's to be in the red is because brokerages are subdued. CLSA has downgraded the stock to underperform from buy. Citi has a sell with a target price of 5290. Antique has maintained its sell rating on the stock as well.
All right, thanks a lot for that. So Street is divided on Dr. Reddy's performance. Let's see which way it goes. But M&M Financial could be under some pressure today. Abhishek is here to tell us why. Abhishek, over to you.
Well, Sonia, the numbers were good. However, the management has tweaked the guidance which may keep the stock under pressure, as you mentioned. So, the guidance that management has tweaked is that the ROA was initially targeted at 2.5% in FY25. Now, management says that it is difficult to achieve this ROA given the fact that they expect the net interest margin to be on the weaker side. So, NIM can be softer than the earlier estimate that the management had. Drivers for ROA would be other income and lower credit cost or lower provisions for NPAs. They have also tweaked, ECL assumptions, that is expected credit loss, or as we call it in normal language as provisions for NPAs, that has been tweaked. So for secured products, they have tweaked it in terms of giving it a go. Estimate tweaked for provisions lowered by 86.1 crore for secured products, which has helped the earnings this time around. So Q3 FY24 net interest margin has expanded sequentially by 30 basis points. Asset quality continues to improve, so gross NPA ratio is perhaps one of the lowest that you are seeing in last 34 to 36 quarters. AUM growth is healthy at 17.8% YOY and 2.5% sequentially. Take it with a pinch of salt that the tenures are increasing, and that is why you are seeing lower repayments and higher AUM growth. In terms of the performance, both in PNL, the NI and PAT is ahead of our poll. Back to you.
Okay, all right, Abhishek, thanks for that. And the management of Mahindra & Mahindra Financial will be joining in at 10:10 a.m. today on Bazaar. Well, let's get back to another couple of results. Sonal tells us about SRF. Sonal, how are the numbers?
Well, the numbers are weak, lower than what the CNBC-TV18 poll suggested. The revenues were down 12% on a YY basis, lower than the poll at 3184 crore rupees. EBITDA was down 32%. Margins, they declined almost 600 basis points, and it was lower than the poll of 19.6%, came in at 18.5%. Net profit was down 50% on a YY basis. It was led by the chemicals and packaging segment. However, in their commentary, the management indicated that yes, this was a weak quarter and it was substantially impacted by the weakness seen in chemical segment because of inventory destocking and other reasons. But going forward, they expect improvement in the chemical segment. In fact, they're saying they are expecting significant improvement in performance from Q4. The conference call is at 3 p.m. today. We'll get more idea of their commentary. But yes, positive commentary, but weak numbers from SRF.
All right, thanks a lot for that. Upasana is with us to talk about a couple of numbers as Voltas, Cochin Shipyard, KEC. Upasana, what stands out for you?
Well, first up is Voltas. The company reported a weak quarter this time around, and the stress is mainly coming from the international business side in the electromechanical project segment. Well, coming to the revenues, they were above our estimates, while PAT and EBITDA were below the poll numbers. Revenue saw an uptick of almost 31% on YoY basis. Margins stood at 1.1% versus 4%, while we were working with a poll number of 4.05%. Coming to the unitary cooling product segment, the revenue saw an uptick of 21% and margins also sharply expanded by 100 basis points to 8%. While the growth momentum continued in this segment and volumes also grew by almost 22% on YoY basis. Coming to electromechanical projects, on the international business, a few projects, especially in Qatar, are still under stress due to delays leading to cost overrun and resulting in a loss of almost 143 crores in the current quarter. Next, is Cochin Shipyard. The company has reported a strong results. The revenue saw an uptick of almost 64% on YoY basis. EBITDA stood at 310 with an uptick of almost 109% on YoY basis, and margins also sharply expanded from 23% to 29%. PAT also saw an uptick and saw a growth of almost 1.2x times and stood at around 244 crores. Next up is KC International. The company also reported a good quarter with a revenue uptick of almost 14%. The margins also sharply expanded from 4.6% to 6.2%, and YTT order book plus L1 position of the company stands over 38,000 crores.
Okay, Upasana, thanks very much for that. Well, let's move on and talk about the insurance space. PB Fintech reported numbers, and so did Star Health. Yash is standing by with details on both. Yash, morning.
Well, good morning, Prashant. So, of course, PB Fintech, the numbers looked quite good for the third quarter. Of course, the highlight for the company was that they spoke about the first quarter of profitability, consolidated profitability on new business and the core business as coming in the third quarter. As far as the revenue is concerned, the total revenue that grew by 43%, under which the core business revenue was up 40%, the new initiatives revenue was up 50%. Contribution was up 61%. The contribution margin was higher by 400 basis points in the quarter. Adjusted EBITDA profit, that came in at 39 crore versus loss of 28 crore. The adjusted EBITDA margin came at 4% versus negative margin of 5%. And finally, as I spoke about the first quarter of profitability, profit after tax at 37 crore versus loss of about 87 crore. For Star Health Insurance, the numbers looked weak. Net earned premium grew at 15% on a year-on-year basis. Compare this to the industry growth. The average standalone health insurance industry has grown upwards of 25%. So this was subpar growth as far as industry comparison is concerned. Underwriting profits were down 9%. Underwriting, your combined ratio came in at about 97.83% as compared to 94.81% on a year-on-year basis and 99.22% on a quarter-on-quarter basis. One important point to note under Star Health is that the incurred but not reported claims, the IBNR claims, seem to have gone up significantly. Retail health claims were up 32% and group health claims, they were up about 15%.
All right, thanks a lot for that. Well, lots of numbers coming through, so let's help you do a quick recap. Stocks with positive news flow, there's TCS, M&M Financial. Well, I'm not too sure because the company has, of course, scaled down their own guidance, so maybe pressure there. PB Fintech, Cochin Shipyard and KEC International, while stocks with negative news flow, L&T, Dr. Reddy's, SRF, Star Health and Voltas. But Brent crude prices have also been inching higher to about $84 a barrel. The last time I checked, Manisha Gupta joins in for a roundup of all the action there. Manisha, good morning.
Morning, Sonia, and thank you for that. Well, the crude oil prices have been quite volatile. We did see 1.5% of gains in the overnight markets for crude. This is on the back of higher global economic growth forecast by IMF. There are escalating tensions in the Middle East. The U.S. also has reimposed sanctions on Venezuela, and you also are looking at the U.S. crude stocks declining by 2.5 million barrels. The street will now watch out for the FOMC meeting announcement today, and it is the OPEC and allies meeting on 1st of Feb. So these two events will keep the markets quite jittery.
Okay, Manisha, thanks a lot for that. So a couple of events that are going to keep the markets jittery, but one stock where there is divided opinion on the street is Dr. Reddy's. Now, decent set of earnings coming through, but the US market growth has been due to Revlimid generic. Europe has also picked up. So let's do one thing. Let us talk about that. The numbers were aided by new product performance. The company's US sales in Q3 were better than estimates. Erez Israeli, the Chief Executive Officer of Dr. Reddy's Laboratories, joins us now. Mr. Israeli, the US market led the beat in this quarter. Can you start by telling us how much of the US sales were aided by Revlimid generic and the base business?
Yeah, it's primarily led by the base business, launches of new products, and with some low level of price erosion.
All right, but Revlimid generic seems to be better than estimates for the company. Is that the case?
Not really. It's as the nature of this product is a settlement that was done by court with the known quantities, so it is done in according to our expectations, and we are doing exactly as agreed as per the settlement that we have.
So good morning. Did you see any pricing pressure in your US business?
So we do see pickup of market share in products. There is more attention to security of supply, to logistics, to the ability to build stock in the US, and less about a price discussion like normally. Obviously, in the US, there will be always price erosion every time that there is a competitor that is coming or the customer is going for a new bid. But overall, it's much more about consistency of supply. And that's the main reason. Service and consistency of supply are the main reason for the pickup in the market share of the base products.
So what is an average run rate for the US business going forward? Would it sustain at these levels that you've reported this quarter?
I think we should expect it to continue to be to grow actually, as so far all the parameters are healthy. Our service level, linadulamide, which is a generic Revlimid, will continue to be meaningful, as well as I believe that the price environment will likely to be in that range. So we are expecting to continue to do well.
Okay, well, the company has guided for margins of around 25%, but it's beaten estimates for the past few quarters. My question to you is, what's leading to the beat? What's the guidance from here on?
So we continue to be in this area. Sometimes we will be above it, like now, and sometimes we'll be below it. It obviously depends on the portfolio of products. Obviously, Revlimid helped that situation, as well as compositions of more profitable products and the normal. The reason that we are still maintaining the 25% because we look at it as a long-term commitment, which we know that sometimes below as per the profile of a specific quarter. But it looks like that in the last couple of quarters, we are on the high side of that guidance.
Okay. No, so is there an upside to your guidance of 25%?
No, because we are not managing ourselves according to that. We are investing in our future. We are investing in both generics as well as biologics, as well as innovation. And we know that it could be fluctuation on portfolio and pricing. So we look at it more as a long-term type of environment that we would like to be rather than a specific guidance for a specific quarter.
All right, let's also talk about the India business, right? The growth was around 5% this quarter. What led to that slower growth and what is the guidance for the rest of the fiscal in India?
Yeah, so it's primarily led that we acquired, and it has actually per the plan Sidmus, and when we acquired it, we knew that it would be price erosion. So that contribute to that. Plus, last quarter last year, we had a certain divestment of product. Actually, if you take both of it out, we are at a double digit. We are guiding that we inform in the next coming quarters, we will be in double digits, and primarily led by big brands as well as introduction of innovation.
I wanted to ask you with respect to the Bachupalli plant, could you detail the number of observations and what is the status of the observations?
In the Bachupalli, in the campus, we have a few facilities. The site that got denied is our biologic facility. This is a site in which we got pre-approval inspections for rituximab, and we addressed those observations in the stipulated time. Then we have FTO3, which is an oral solid plant in the same campus. Here we got 10 observations, and we also addressed them in a stipulated time, and we are waiting to see what will guide us, how the FDA will guide us from here.
Got it. I mean, do you expect an escalation for the facility? And could you tell us what is the contribution of the plant to your sales?
So I'm expecting rituximab to be approved, so we will address the right to observation. We expect the FDA to accept it. The same we accept the FTO3, and we send also data to the US FDA to, as per the corrective action, preventing actions CAPA that we sent. And I'm expecting also to get an EIR on that. Can it be what you call escalation? Can we get? It's possible. But overall, I believe that we addressed the observation in the way we should.
All right, so let's wrap this up with guidance from your end on what the full year growth could look like.
We will continue to do well. You know that we are not giving specific guidance, but we will continue to do well. We are maintaining our overall aspiration to be double digit, 25% of EBITDA and 25% of ROC. Likely that as long as these current levers will continue to well, we will do maybe probably more than that. And that's what we are aiming for, continuation of delivering of strong quarters like we delivered until now.
Okay, well, that's basically the view. Thank you very much for getting us that. Appreciate you joining in with that perspective, sir. And look forward to more chats. We'll take a quick commercial break here. Deven Choksi will be with us with some fundamental stock talk. Stay tuned, that conversation coming up next.
When our big boss.
Welcome back to Bazaar Morning Call. Hope you're having a good morning. Well, let's get some fundamental analysis going on all the stocks that we listed out for you. Deven Choksi, MD at DR Choksi FinServe, joins us on the show. Hi, Deven. Let's talk about the big stock, L&T. You know, in terms of their order guidance, the commentary is quite positive when they revise that upwards. The disappointment has come in on their margins. How would you view the stock post this recent big run that we have seen?
Yes, Nigel, good morning. Well, I guess I think absolutely spot on. The order book remains, I think, very convincing. In fact, I think quarter after quarter, if you study the pattern of inflow, you find incremental inflows of new orders coming in. And that's where probably one gets greater confidence because these orders get executed over 3 to 5 years period. And that gives you the visibility of sustainability as well. However, as discussed earlier as well, the challenge is going to be always in the area of, I think, maintaining the margin because the cost pressure is continuing in the business. And I guess I think it is universally across, wherein probably I think the company would face the challenge of maintaining this particular margin. So give and take on this aspect that on one side you have sustainability factor established, on the other side I think margin would remain under pressure. And if at all any surprises comes, I think it might come through some of the newer projects, particularly in the space of renewables and others, where probably the company may be able to ask for better margins. But I think that would probably be few quarters away, as I see it. So as of now, I think the stock factors fully as far as I think the earnings are concerned into the price.
Okay, all right. Seems like a crow as well wants to chip into our conversation. So that's a little bit of some background music we're getting there. But Deven, hi, good morning. PB Fintech actually is the one that I want to talk about. And not just PB Fintech, right, which has reported profits for the first time. But a lot of these platform companies, Zomato has been gaining a lot of ground after Blinkit's been doing very well. Delivery has come back on investors' radar as well. What would your pick of the pack be here?
Well, I think, Sonia, good morning. Well, I guess I think the companies have the new generation of companies, particularly Zomato, has shown, I think, relatively better ability to go for the higher amount of margins. And they have been collecting money, I think, on the per order delivery basis, which is giving relatively better amount of stability to their earning books and their revenue books rather at this point of time. Whether I think the valuation fully justifies this particular move, I'm not too sure. I believe that even if the incremental amount of revenue that they are collecting through this particular process, particularly in case of Zomato, I believe that I think they're still relatively away from I think the justification on the valuation front. Currently on the valuation above 1 lakh crore, I think which is the market cap. I guess I think the company will have to significantly ramp up the revenue model and the profits for justifying the kind of price that the stock is commanding at this point of time in the market.
Have you looked at SRF numbers, Devin? Numbers came and again, I mean, it's disappointing, I think, for the third or the fourth straight quarter. But they're saying that maybe this is, again, it's an expectation that things are at the bottom, earnings will trough. The management, I think, on the call also said that things will look better than what we've had so far. Your approach, SRF?
Yeah, Prashant. Well, I believe that I think this is true with most of the chemical companies today. And I think the third quarter is not something which one would find great results with many of the companies. But the most important part is that I think in the third quarter, the pricing scenario has stabilized. And I think the companies, of course, I think they were having the businesses, I think to talk about particularly the specialty chemical companies, where they have got the export related business as well. Not completely sure about SRF at this point of time, but from whatever I heard on the from the management side, I believe that I think the company is basically now seeing the better opportunity starting from the end of third quarter, getting into the fourth quarter already they've started. Believe that I think the business is improving as far as the numbers are concerned. And particularly on the margin front, we should be seeing the better numbers going forward from the fourth quarter onwards. So maybe one can argue that the stock has been used in the performance for some time now. And I think the price performance could possibly start improving with the improvement in the margins in the fourth quarter and thereafter. So one could possibly buy the stock at current levels, given the possibilities of better margin as well as the performance in the next financial year.
Okay, all right. Devin, I wanted your view on these RAC players. Voltas as well as Blue Star, both of them came out with a set of numbers. I'm just looking at it in terms of growth. Blue Star has done much better. It's outpaced any of its competition, both for the last quarter as well as for the last 9 months. The stock price as well has reflected that. But what's your view on both of them? Because Voltas continues to disappoint and Blue Star continues to, surprise positively.
I think my reading says that I think slippages in case of Voltas is largely in the area of project side. I think some of the projects probably haven't materialized, and that's where probably the numbers are not looking as strong vis-a-vis the other peers in the industry, particularly Blue Star. So I guess I think once again they are entering into the better season now, the last quarter of the financial year, and also I think the first quarter of the next financial year would be the peak season for this particular business, and that's where one could argue for relatively better performance on the execution side. But I must say that I think all these companies have actually factored into their price the kind of possible performance that they would be getting into in the fourth quarter as well as in the next quarter. So from that perspective, how much upside in the stock price I think is there? I'm not too sure. On the contrary, I feel that I think companies, if they fail to perform on the expectations, probably I think they would have the possibility of I think the stock getting derated. So that is where one will have to be a little bit more careful. At this point of time, we believe that great business, great opportunities around, but at the same time, I think the price is factoring everything. The valuations are not easily cheap at this point of time, so one will have to wait for some time.
Okay, that's on Voltas. Stock, numbers were below street estimates. In fact, many actually non-index large caps have reported weak numbers this time, right? Not just Voltas, SRF, the margins were weak. Something like a VIP, which is in this travel space, has been under a lot of pressure, very weak numbers as well. Devin, I wanted your thoughts on the NBFC space. What do you do with M&M Finance? Numbers are not bad, but the company has scaled down their guidance. They're saying margins are weak, etc. How are you positioned on the stock?
Well, I think NBFC space in general, Sonia, would have some amount of challenges. Of course, Bajaj Finance has given relatively better numbers, and actually speaking, I think the company is showing, I think, far more better strength than ever before. I think not too sure about, I think, many other NBFC companies, whether they would be in a position to maintain the liability side as effectively as the company like Bajaj has maintained. I'm not too sure on that particular aspect about, I think, the cost and the NIM factor going forward as well. So one will have to bifurcate between the NBFC companies where exactly the situation is remaining relatively stronger. I feel that I think the likes of Bajaj Finance I think remains relatively more stronger play, including Poonawalla along with, which has shown relatively better performance. I would think that I think those kind of companies will remain a better choice in the portfolio for investment purpose.
Devin, we'll leave it there. Great chat as always. Thank you very much for joining in and appreciate your time here at CNBC TV18. We'll take a quick commercial break here. We'll come back. Anuj Singhal will be with us with a quick trade setup on the other side. We'll also get you our top stock picks of the day. Our technical and F&O experts chime in as well. So all of that coming up in a bit.
Insurance.
Okay, welcome back. There's 12 minutes to go for the pre-open session. Anuj is here with how he's looking at the trade setup. Anuj, morning.
Morning, Prashant. Quite a terrible day yesterday, right? I mean, if you're looking at the Nifty, but I mean, if you look at things in larger perspective, perhaps still not as bad. I mean, this is what the Nifty has done over the last 4 days. Starting from the expiry minus 1 day of last series, and we had a low of 21,137. Then on expiry day, we improved it by 100 points, 21,247. And then on the first day of new series, it was even higher, 21,429. And that was the magnitude of the rally that even yesterday's big intraday collapse still made sure that at least the low was once again higher. So we still made higher lows for the Nifty for 4 consecutive days. I think that's a positive. What that means is that perhaps some kind of bottom is in place as long as 21,429 is holding. That's my basic premise. And even if 21,429 breaks, I think the downside could still be capped at 20,500 to 21,000. Of course, 2 big days lined up, today and tomorrow. Today you have the FOMC outcome and the Bank Nifty expiry as well. Union budget and Nifty expiry lined up tomorrow. So in that sense, 2 very crucial days. I think it's better to stay stock specific for next couple of days. L&T numbers, of course, slightly weak, but guidance is very strong. SRF and Voltas numbers were weak, but SRF commentary was quite strong. So let's see how that reacts. M&M Finance, strong numbers and good asset quality. PB Fintech, of course, could be the stock of the day. I think one of the stocks of the day, given the kind of numbers that they've posted, first quarterly profit, and the stock now trying to go above its issue price. And of course, 2 big days of earnings, Maruti, Sun Pharma, Ambuja, Godrej Consumer, Bank of Baroda, Dabur. So a lot lined up. Coming to the Nifty and Bank Nifty levels, on the Nifty, 21,429, the Monday low, and 21,247 last expiry day low would be the support levels. And on the upside, resistance is placed at 21,650 to 21,700, and then 21,750 to 21,800, which is the option writers zone from where we slipped yesterday. On the Bank Nifty, my basic premise is that there's no trade till the clarity emerges. Any kind of trading here is a bit of a gambling. There's a bit of a range here, a large range actually, 1,000-point range, 44,800 to 45,800. If you can smartly play that, good for you. Otherwise, focus on individual stocks.
Okay, all right, Anuj, thanks a lot for that. Well, let's get in some technical strategies then. Sudarshan Sukhani and Prakash Gaba join us on the show. Good morning, gentlemen. Thanks so much for joining in. Well, Sudarshan, you tell us, yesterday we had a bit of a pullback in comparison to the previous session where we put on a good amount of weight. What's your view on the Nifty as well as the Nifty Bank?
Yeah, good morning. See, the larger view on the Nifty has been that it's going to be choppy and directionless. And that's exactly what the index is doing. Specifically, on a day-to-day basis, we have to see the opening price, the environment around us for that particular day, and then make a decision. So for today, I would say that the Nifty is likely to remain choppy. There may come a time during the day when the market has a sharp dip. That's an intraday buying opportunity. Don't carry positions. There are far too many news events to justify carrying any position. So the Nifty is going to be choppy. I do not advise carrying positions. For an intraday trader, a sharp dip can be a small buying opportunity. The Bank Nifty is an avoid.
Okay, Bank Nifty is an avoid. Prakash Gaba is also with us. Prakash, hi, good morning. How are you feeling about this market? We're just about 1% away from all-time highs. You think we can get there soon enough? And what are the stocks to look at?
Good morning to you, Sonia. Yeah, we'll get there for sure. That should not be a problem. It's a matter of time. But so far, technically, the Nifty and the Bank Nifty looks trapped. So possibly a dip in Nifty is possible. There's a very strong support on Nifty somewhere in the vicinity of 21,400 or 21,500. If it comes down there, or if it gaps down open, perhaps there could be a buying opportunity. But if it stays flat, I think it's going to be volatile, be very, very difficult to trade these days unless we get a gap down. So best avoided Nifty. As far as Bank Nifty is concerned, exactly similar is the case. Very important levels on Bank Nifty is yesterday's high, somewhere closer to 46,000. It's not a buy unless it crosses there. If it crosses there, it's an easy buy there. We can have some good move up there. But so far, it looks like a trap zone Nifty and Bank Nifty, and best avoid it.
All right, gentlemen, morning. Let's talk about stocks. Sudarshan, what are your trades?
Well, UPL is an intraday selling opportunity. The stock has been in a bear market, almost a bear market. Sell with a stop above 545. Tata Chemicals had that big decline, and now it's in a small trading range, likely to break on the downside. Once a stock decides on a trend, trading ranges move in that direction. So this is a breakdown likely. Short with a stop above 1,025. Manappuram has broken out of a long 1.5 month trading range. That's interesting. It's looking for higher levels, buy with a stop under 180. And Gujarat Gas has been in a stunning bull market. It's a stock that's not discussed. But there is a trading range which is on the verge of breaking on the upside. Gujarat Gas, like Manappuram, is also a buying opportunity with a stop under 547.
And Prakash, what about you?
I like two stocks, one long, one short. I'll go with long first is Grasim. Grasim, the basic chart structure is positive, seen some consolidation, still in trap zone, but looks like there could be some up move here. Yesterday's move was in pause zone, trading at 2125 Grasim. One could have a stop below 2110 and trade long here. The first technical targets on Grasim would be around 2150. And once it crosses there, possibly 2160. So I will good for a setup of 2150 Grasim. Looks good to me. Stock that looks weak to me is Bajaj Finance. It's broken down, trading at 6826 zone. I would have a stop above 6,900 and trade short side. Possibly we'll see lower levels to even 6,500. That's not ruled out. But the first technical target should be 6,600. So Bajaj Finance is a sell.
All right, thanks a lot for that. Well, those are some stock ideas. For now, let's do one thing. Let's take a short break. On the other side, we'll come back with the pre-opening rates. We'll also connect with Ankita Shah of Elara Capital to tell you more about L&T's earnings, the fact that they have scaled up their order inflow guidance, and how to approach the stock. More on that in a bit.
Co-presented.
Welcome back. Let's get a quick handle on what's happening in the F&O market this morning. We have Rajesh Palvia of Axis Securities who's joining us now. Rajesh, hi, good morning. What is the sense you're getting about the market? We have a big event tomorrow. How do you approach the markets today?
Yeah, good morning. Ahead of this big event, there is again, volatility in the market, and Nifty has witnessed again supply pressure from its major resistance zone area at around 21,800. So looking at the data setup, major call writers are still aggressive at 21,700, 21,800 strikes. So that seems to be act as a major supply zone for near-term setup at this moment. But on the downside, the put base is still there at 21,400, 21,300. So that area is likely to act as a good support area in this corrective move. Even if we go with the Bank Nifty setup, Bank Nifty has shown further negativity and broken its important support area of 45,500 on Bank Nifty spot. So if we continues to trade below 45,500, then possibly we may see further more pressure in Bank Nifty towards 45,000. Even if it breaks those levels, then furthermore follow-up selling we can see in the Bank Nifty. Some long unwinding setup was there in the previous session. So looking at the Bank Nifty setup, we believe that, sell on rise could be the strategy for Bank Nifty at this juncture until the Bank Nifty not manages to cross above 45,700, 800 zone. So to play this Nifty move, we are initiating here short straddle strategy. For this strategy, you can go by writing call and put of 21,550. By doing this, you will get inflow of around 300 rupees as a premium. So you are protected till 21,250 on the downside and 21,850 on the higher side. And for this next coming trading session, we are not expecting that Nifty to cross these range. So once this premium shrink to 150 or 180, you can book profits. Keep a stop loss of 360 for initiating this short straddle at this moment. On stocks front, I think real estate space can do well. DLF is looking promising. continuation of uptrend is there. Looking at overall structure, we believe that one can buy DLF for upside target of 810 to 815 with stop loss of 772. Another stock is from oil marketing company, that is BPCL. Very strong buying action is going on in this stock. Stock comfortably holding above 500 level. So we believe that BPCL can continue for the more upside. 525 to 530 is the next target. One can buy with stop loss of 490. And the third stock is from automobile space, that is Tata Motor. Clear outperformance is there. So we expect another round of buying action could be there in this stock. 885 to 890 could be the next target. So Tata Motor is buy with stop loss of 842.
All right. Thanks a lot for that, Rajesh. Those are some FNOQs coming in. Let's focus on the big stock now, L&T. We had a chat with the management of L&T during their conference call. Remember, they raised their order inflow guidance. But let's listen in exactly to what R. Shankar Raman, the whole-time director and CFO of the company, had to say on the outlook for order inflow as well as the revenue growth. Take a look.
Unlike order inflow, where a couple of earlier wins or later wins can move the needle, revenue is fairly set because we know what we need to execute in the last 3 months. So my guess is, I think, as compared to 15%, we will outperform that. And just as a landing place, I think I'm assessing that to be more closer to high teens. We will do all our best to see how far we can improve, but it appears to me it will be high teens. My sense is we will be at similar levels as we close this year. And it is possible that given the dynamic that I spoke to you about, it could fall between 8.25% to 8.5%.
Okay, so EBITDA margins will be in that 8.2 to 8.5% band. Remember, the core margins were muted this quarter around. The operational performance was actually under pressure. But overall, the order inflow guidance has been raised. So a bit of a mixed bag, you'd have to say. Ankita Shah of Elara Capital, who tracks the space very closely, joins us now. Ankita, how did you read into the numbers and what would your recommendation be on the stock now?
Yeah, sure. Firstly, thank you for having me. So the numbers were good. There has been a good progress on the order inflow side. Also on the revenues, the numbers are in line with our expectations with 19% growth on a YOY basis. EBITDA margin at 10.4% was good, but the core ENC margins at 5.5% was kind of muted. However, the management outlook going forward looks positive commentary, given that the low legacy, past legacy projects are nearing completion and new projects are expected to hit revenue recognition threshold from FY25 onwards. Also, the mix of projects is changing more towards hydrocarbon projects, which are relatively better margin in nature. Hence, we should see uptick in margins going forward. Even on the order inflow side, the prospect pipeline looks robust at around 6 trillion, almost up 30% on a YOY basis. And a good part is a large part of these prospect pipeline are from the domestic geography, where the inflows for this financial year has been muted, probably because of a pre-election year. But going forward, they are expected to pick up going forward.
All right. Hi, Ankita. Good morning. Good to see you. When yesterday the stock was a little under the weather, and today as well, it's likely to open up a little lower, going by the pre-open rates. But it's been a big outperformer, 70% higher in the last 1 year. If in case there is weakness, would you look to be a buyer in the stock?
I think yes, the outlook for the company is positive. Given that we are, almost around mid the Lakshya target, the FY26 that the company has given, we are almost around the midpoint there. And looking at the performance so far, the company seems to be on track to achieve the Lakshya 26 target. And also the overall domestic as well as international outlook on inflows and on execution looks robust. So I think it could be a good performance can be expected even from here on.
Okay, and I didn't get your target price. What's your 1 year target price on the stock at this 34.50 level? Is the risk reward still favorable for investors?
Yes, we think there could be another 10 to 15% upside from the current levels. And we have a target price of 4,051 on the stock. We are valuing it at core earnings multiple of 25 times on FY26.
Ankita, hi, morning. Do you track stuff in the industrial space also, or it's largely in the infrastructure side? The reason I'm asking is we've got the interim budget tomorrow, and two things are certain. The government most likely will reaffirm its focus on capex spending, etc. And second, there's a fair bit of action and activity around green energy and how to kind of give a fiscal push to that through a fund or subsidies, etc. So, I mean, I don't know if your coverage universe reacts to these two things and in which way. I mean, any thoughts at all?
Yeah. So, I do track infrastructure sector, largely roads and railways. And we see a good, a continued capex spending and announcement on these sectors going forward. Overall, this year, and also, the ministries have been, or these two ministries have been performing very well in terms of their spending. However, we are expecting the order awarding activity has been a little muted, but we expect, given the increased allocation on the sectors, this should improve going forward. So probably we should see more of inflows and higher allocation to particularly roads and railways sector going forward.
Okay, particularly on IRB Infra, I wanted your thoughts, because that stock has been up and about. It's had a great trajectory over the past couple of months. Anything that you're expecting on that front for these toll operators, and are you bullish here?
Companies like IRB Infra could be a beneficiary going forward, because NHAI is looking to change the order awarding mechanism, more towards BOT toll projects versus earlier hybrid annuity projects and EPC projects. Given that IRB is one of the few companies who have a long experience in executing toll projects, hence if the awarding goes in this direction, like more of BOT toll projects, then IRB should be a beneficiary of it going forward.
All right, we leave it at that. Thanks a lot.
Uptick in inflows.
Okay, uptick in inflows. Got it. Thanks, Ankita. Very helpful, actually, to talk about many of these stocks. That's Elara Capital with their view on how L&T is performing, as well as a couple of the other names. By the way, PB Fintech is really the stock of the moment in the broader markets. Just pull up the stock intraday. In pre-opening, the stock is up, I think, 10%, if I'm not wrong. So PB Fintech, just take a look at that. Zomato is the other one. We were talking about how, 6% higher now. It's settled at a 6% up move. Zomato is also up after Bernstein raised their target price on the stock and spoke about how both Zomato and Blinkit are doing very well. So some of these new age tech companies are picking up pace quite a bit. But let's get some 9-10 calls going. Sudarshan is back with us. Sudarshan, what's the big call at 9-10?
Well, Manappuram is a buying opportunity with a stop under 180.
Okay, all right. Thanks a lot for that, Sudarshan. Well, let's get in a quick revision on some of those top stocks that we're tracking today. Sonal joins us to tell us about SRF, whose numbers weren't very, very good, but the management is guiding for better times ahead. Sonal?
Well, that's right. SRF, weak set of numbers, actually much lower than the poll, which was already expecting weaker numbers. Revenues declined 12%. We have an EBITDA decline of 32%, which is lower than the poll. We had operating profit margins coming in at 18.5% versus a poll of 19.6%. Net profit declined 50% on a YOY basis. Now, if we look at the segmental performance in terms of the EBIT, technical textiles has done well, and the management says the demand here is actually strong, and that is something that they expect to continue. Chemicals was the one that saw a sharp decline, where the EBIT declined to 320 crores versus 561. Packaging saw a sharp dip in their EBIT, and they say that there's oversupply in the markets and less demand, leading to margin pressure coming in. However, they say that while this has been a weak quarter, chemical segment will start seeing improvement, and it is something where demand will come back, and they are confident of significant improvement in performance from Q4. So that is some positive commentary coming in from the management. Jeffrey says that the miss was driven by weakness in packaging, and chemicals continue to face headwinds from destocking, the subdued demand in refrigerant gases as well. They have an underperformed rating with a target price of 2,140 rupees a share. On the other hand, Morgan Stanley has an overweight rating. They continue to be very bullish on organic growth opportunities and the recovery that management is talking about. We'll need more details, so the conference call is at 3 p.m., but this stock will be in focus till then.
All right, thanks a lot, Sonal, for that. Well, let's hop across to Ekta now. Dr. Reddy's, there's a bull and a bear case scenario. So Ekta is here to give us both sides of the story. Ekta, over to you.
Well, I'll start with the bull case because the numbers were better than expectations. Revenue was up around 7%. Street was anticipating 2% growth. Margins were better than expectations of around 28.6%. It reported over 29%. And the profit of over 1,370 odd crores was better than expectations of less than 1,300 odd crores. Now, the beat was driven by strong US sales. So US sales were $403 million versus estimates of $355 million and versus a estimate of a Q-on-Q decline, but that didn't come through. Revlimid generic contribution seems to have risen by around $5 to $15 million on a Q-on-Q basis. Europe did well. It was up around 15% year on year. India was subdued, but the company is expecting double-digit growth in the coming quarters, and the company is maintaining its guidance of around 25% margins going forward as well. Now, in terms of the bear case, according to analysts, nearly half of the profits this quarter seems to be from Revlimid generic, while the core profitability was underwhelming according to them. In fact, they expect the core EBITDA margins to probably remain capped at 22 to 24%, and the Bachupalli plant observations, which are around 10 to the FTO3 unit, remain a concern and something that the street would be watching. Also, remember that the stock has run up quite significantly, over 35% in the past 1 year, trading at around 22 times 1 year forward. Now, in terms of brokerages, most of the brokerages I actually saw were negative on the stock. CLSA downgraded the stock to underperform versus buy. Citi sell target price 5290. Antique sell revised their target price to 530 versus 579. Elara reduced target price of 6018. Macquarie has reiterated its outperform with a target price of 6,400. And HSBC is on the fence. They've maintained their hold, but they've raised their target price to 6310 and the target price on the US listed ADR as well.
All right.
Right. Ekta, thanks for that. Let's revisit PB Fintech as well before markets open. Yash is back with us. Yash.
Well, Prashant, PB Fintech, it was a very strong quarter for the insurance aggregator. The highlight for the management and the company in this quarter was, profitability on overall business. That is the core business as well as new business put together. And this would be the first quarter when the company turns profit as far as the bottom line is concerned. If you speak about the total revenue, that grew by about 43% in the third quarter, under which the core business revenue, that grew by about 40%, and the new initiatives business revenue, that also supported very well. It was growing by about 50% in the third quarter. When we speak about contribution, that was up 61% in the third quarter. The contribution margins were also very strong, which grew by about 400 basis points. They came in at about 30% versus 26%. Let's look at adjusted EBITDA on an operational basis. Adjusted EBITDA profit of 39 crore versus loss of 28 crore. And if we speak about margins, adjusted EBITDA margin came in at 4% versus negative 5%. So, of course, strong performance on the top line, strong performance on the contribution side, strong performance on the adjusted EBITDA side. Profit after tax, as I said, the first quarter of profitability, the profits came at 37 crore versus loss of 87 crore. It's a good set of numbers, but if you see the stock performance, it's been anticipating these numbers and has been moving along in that particular trajectory. It's up 127% in the last 1 year, 30% in the last 3 months, and about 14% in the last 1 month. Trading at very close to their 52-week high levels. The current market price is about 910, 52-week high levels is somewhere around 940 rupees.
All right, thanks a lot for that. That's PB Fintech, one of the big movers today. Another stock to look at is KPIT Tech. So that continues to be in focus. Remember, not only was it a steady quarter for the company, came out with numbers yesterday, but the most important thing is that the company is confident of achieving its revised guidance of FY24. It had increased its FY24 guidance to 37% on the top line from 27 to 30% earlier. And they yesterday said that they are confident of achieving that revised guidance. So that's why there's some follow-on buying on KPIT Tech this morning as well. But Upasna is standing by to tell us about Voltas and why you should be tracking that one. Upasna, over to you.
Well, Voltas reported a weak set of numbers. Their revenue were above estimates, while PAT and EBITDA margins is where the stress lies, and they were below the poll. Well, coming to the company's international business in electromechanical project is where the stress lies, and a few projects, especially in Qatar, are under stress due to delays leading to cost overruns, resulting in a loss of almost 143 crores in the quarter gone by. That's the reasons the margins were impacted. The margins currently stands at 1.1% versus 4%, and we were working with a poll number of 4.05. Coming to the revenue, it saw an uptick of almost 31%, which was above our poll estimate. And unitary cooling products is where the growth is seen. The company says that the growth momentum continues and the volumes also grew by 22% on YoY basis. Coming to the revenue in these segments, the revenue saw an uptick of almost 21% on YoY basis, and margins also expanded sharply by 100 basis points and stood at 8%. So all in all, we see a weak set of numbers, mainly because of the international business that saw stress in electromechanical projects, while the main segment, that is unitary cooling products, saw good revenue growth.
All right, thanks a lot for that. We just have 30 seconds to go before the markets open. But do watch out for some of these names. Cochin Shipyard is also on my list, 7% higher now in pre-opening. Good set of numbers coming through. So the market is definitely picking and choosing its winners, and there are plenty that you can watch out for and trade today. So here's the first tick on the index coming through in second, 20 points lower on the Nifty, down about 0.1%. So you'd have to say largely flat, no great move on the upside. The mid-cap index is also flat with a bit of a positive bias there. L&T is really the stock that's taking a beating this morning, 3% low on L&T. I think the fact that the operational performance is weak has overshadowed the higher guidance from the company. So L&T is down about 3% odd. You have Axis Bank, ICICI Bank, HDFC Bank. The Bank Nifty is actually dragging its feet a bit this morning, so don't lose sight of that. 200 points low on the Bank Nifty. Infosys, Reliance, or other heavyweights are also dragging at this moment. On the upside though, NTPC is up about 1.5%, Divi's Labs is up about 1%, Tata Motors, Nestle, UPL, Coal India, Adani Ports are a couple of other stocks that are trending in the green right now. ITC is also holding up, and so is Asian Paints. Not too bad over there. But otherwise, you'd have to say it's a very quiet opening, especially for the frontliners. All the action really is in the broader markets, but some stocks that are hitting fresh 52-week highs as well. PB Fintech, by the way, is at a fresh 52-week high, so don't lose sight of that. And many others from the large caps as well, sitting at fresh 52-week highs. But the mid-cap index is outperforming.
Well, that's right, Sonia. And a couple of big winners actually from the broader markets. You mentioned Kochi Shipyard, also pull up Piramal Pharma. That stock's up close to 6.5%. Second consecutive quarter where they have maintained their margins. On a year-on-year basis, it looks very good. The street likes it. The stock is up close to around 6.5%. IRB Infra is taking a bit of a breather. Last few days, it's been running big time. In fact, in this month so far, it was up close to around 30%. Now it's pulling back close to around 3% in trade today. A few more notable big movers. Mahindra & Mahindra Financial. Well, the street believes that the numbers look pretty good, so that stock's flying away. Jamna Auto is another stock that's up close to around 2.5% in trade. IREDA, that's another stock that's up and about in today's trading session. What's under pressure? Voltas. That opened up with a cut of around 2%, I think, but it's cut some of its losses. Now it's on the verge actually of moving into the green, so that's one stock that's in focus. India Bulls Housing Finance is up close to around 2.5%. Big up move is what we're seeing out there. And some follow-through move even on KPIT Technologies. There was some fear that maybe the numbers won't be too good. The street likes the numbers. Street likes what they had to say in terms of an outlook as well. And that explains why that stock is up close to around 2% in trade today, building on yesterday's 3.5% gain. Prashant.
Okay, well, so it's a 40-point lower start, 50-point lower start. 21,475 is where we are starting the day at. And the big one on the downside is, of course, as we said, L&T, which is now down a full 5%. So that's coming through with large cut. And of course, IRB is down about 5% as well right now. You know, Kirloskar Electric was a stock which shot up in the last 60 minutes yesterday. It's seeing about 3.5-4% pullback. That is KECL. Yeah, that's one. So about 145 right now. VIP is down about 2%. It's just opening up. Indus Tower is down about 2. Trent is down about 1.5. Rain Industries, which had a sharp move and saw some profit booking, is down again this morning with about a 1% lower start as well. On the upside, apart from what we mentioned, Azad Engineering, you know, there's news there as well. 6% higher on Azad Engineering. The only reason I'm mentioning that is because volumes are the third highest on the NSE right now. It's at about 906, 907, 6% pop. That's a really large one. There is Zentech, which is about 5% higher, 840. M&M Finance is up 4%. M&M Finance started slow and then has picked up pace quite a bit. There is KEC, which is up about 4%, reacting to number 654 or so. There is Keynes Technologies, which is up about 4%. EMS Limited is another one which starts about 4-5% higher. I'm not sure these are individual result reactions or just a broad move before the budget, because a lot of the focus has been on sort of making in India, what else can be done there, etc., etc. Essentially, the expectation is that more items would be included, at least the intent would be shared tomorrow. Well, UTI AMC saw a 10% move yesterday. It's up about 3.5% right now. So yeah, I mean, this is looking good. Policybazaar, which started sharply higher. It opened at about 959. It surged to about 1,023, about a 60-70 rupee move after the open. It's cooled off a little bit. So it's trading now at about 983 or so. So that's the overall picture that we have on our hands. Sorry?
I just want to make one mention on PB Fintech. Okay, it's flashing actually on the screen. PB Fintech has now crossed the IPO price of 980 rupees. So that's a big mover today. Of course, very good numbers, reported profits for the first time. And that is a net profit for the first time, and operational performance has also picked up significantly, and now it's crossed the IPO price as well. So big moves coming.
Some of those investors had to see half the price as well at one point of time, and it's seen a good recovery from there. So they'll be breathing quite well today.
All right, no, absolutely. A rising boat lifting all tides, and of course, I mean, PB Fintech itself is, as Sonia mentioned, done well. I mean, it's much needed improvement coming through in numbers, etc. Out there as well. Let's welcome in our market master of the day. Mihir Vora is now joining us, Chief Investment Officer, Trust Mutual Fund. Mihir is in our studios. Mihir, great to have you with us here. Thank you very much for your time. Let's just start with just that, which is Policybazaar, PB Fintech. What are your thoughts?
See, I can't comment on specific stocks, but in general, the fact that there are now companies in specific new age or new tech segments, which are B2C, these are companies which have now created some kind of a moat in terms of their niche. So whether it's in the B2C retailing space or B2C financial space, we have other examples where B2C companies which have millions of subscribers are now cross-selling loans, etc. So this network effect and the first mover advantage is leading to a lot of value creation in some of these new age companies. So we've been discussing this for the last couple of years. We were not comfortable when a lot of these value IPOs came in 2022. So we did not participate in that. But last year we started participating when the valuations corrected. It was only a question of valuations. Nobody was questioning the fact that these business models are unique and they have a moat. And in most of the segments, it's going to be a winner-take-all kind of a situation. So maybe you'll have 1 or 2 or 3 players max in each of these niche segments. And I think now we are beginning to see the benefits of some of these.
Okay, by the way, I want to mention that the all-time high for PB Fintech was 1470, right? So it's still off 50% from its peak. I mean, people have lost and gained money in this one. So, well, we'll keep tracking that for you, PB Fintech. But how are you feeling about the markets? I want to start with L&T, actually. You may not want to comment on individual stocks, but, there is operational weakness in L&T, but the order inflow guidance is very strong. As an investor, do you use this as an opportunity to buy into names like L&T, or are you cautious?
No, certainly. Infra and construction and capital goods, the investments theme continues to remain, very robust. I don't think there's any change in that. But, the markets have run a bit fast and you are seeing these +7, -7 in any kind of result, right? If it's a disappointment, it's a -7%. If it's a surprise, it's a +7. So I think the markets are a bit stretched in some of these segments, and you can see some, sharp reactions. We've seen in some of the financials also, sharp reactions on a little bit of disappointment. So I think this is natural at this level of the market. I don't think the structural thesis has changed.
All right. What about Pharma, Amir? That started this year actually very well. One of the best. Dr. Reddy's numbers started a little bit subdued. The stock is well in the green. It's one of the top gainers. Now it's up close to 2%. Your Pyramid Pharma, the rank underperformer, suddenly that one as well has popped up in trade. What are you making of the pharma space? Is the worst of pricing erosion behind? Are things going to pick up from here on?
Absolutely. We've been talking about this, that pharma is one sector which probably is way below its all-time highs. I mean, it's underperformed for almost 5 to 7 years. So I think there was a lot of catching up to be done in pharma, which is now happening. Plus, we had the spate of FDA, you can say, inspections, which had some negative news in some of the stocks. But I think we are all past that. And the fact that some of the largest generic companies in the world are facing financial stress means that these level of generic drug prices are no longer sustainable. So Indian companies were anyway one of the most efficient and cost-effective manufacturers of generic bulk drugs and generic formulations. So I think they'll be the last one standing, and this is what's happening.
Anything from the budget tomorrow, Mir?
Budget, the key thing to watch is whether they continue the capex push. Last 3 years, we have seen revenue expenditure growth of just about 3%, and capex growth of almost 30%. And that's what's creating a lot of the excitement in some of the capex names, construction names, which has been sustaining the market. The fact that this is an election year may veer a bit more towards subsidies and revenue expenditure. So whether it comes at the cost of capital expenditure is something that needs to be seen.
Okay. I just want to point out that for the market, it's a little bit under pressure right now. So down about 50 odd points, but the mid-cap space is really surging. So there's plenty that's moving around over there. A couple of these names, Pharma is up, 3.5%. M&M Financial is up almost about 3 odd percent. Post its numbers, and Tata Motors ahead of its earnings has been just hitting new highs. The entire auto space is expected to do pretty well this time around. Tata Motors has been, I think it's almost doubled in the last 1 year. At this price, is the risk reward still favorable for names like these?
See, I'm more bullish on the domestic economy and the domestic consumer demand. So some of the names where you have international demand, international operations are far bigger. It's difficult to take a call. But having said that, auto in general is another sector like pharma, which did not do much even compared to the pre-COVID levels. So my guess is that auto, pharma, these are segments which are still, in terms of the size of the industry, size of volume growth, far away from what their potential long-term growth rate is, and they have a longer runway, I would say, in this.
In the last 3 years, Sonia, Tata Motors stock is up close to around 10 times from those lows. So if someone wanted to buy a Jaguar, they said, let's buy the stock, let's take a punt in there.
It reminds me of that story of Eicher Motors, right? When it went, I remember at one point it was at 8,000 rupees and it went to the high. Then in the next 1.5, 2 years, on Eicher Motors was 22,000. And at that point, people said, if you'd bought the stock rather than the bike, today you would be sitting in a Jaguar.
It's all timing, right? If you bought it in 2017, if you bought that Jaguar, you would at least have the Jaguar, but if you bought the stock, you would be sitting 1/4 of the stock price. But if you bought it in 2020, you'd be saying, yeah, it's up close to around 10 times. So that's, it depends on when you get it.
Yeah.
Absolutely. But Amir, tell us about the banking space. We got into this year, everyone was saying, wow, this is going to be the year for the banking names. Valuations in line, you have earnings visibility as well in there. And everything else may falter, but this one will hold one end up. It's actually been the reverse so far because of the big boy HDFC Bank.
Absolutely.
How would you approach the space between private and public sector banks?
You're right. It's been a disappointment, and so far it's not about asset quality. Of course, RBI did point out that they are a little bit concerned on the unsecured lending part. So that is something that is a smaller portion of the overall pie. I would not say that could create concerns for the entire banking sector for asset quality. So the concerns are mostly on the margins, and that I think is a function of the fact that RBI has kept liquidity tighter longer than what was expected to be.
Yeah.
You're seeing consistent, liquidity tightness and the corresponding hike in deposit rates. There's a scramble for deposits, and as you said, the big bank wants to fix its asset liability for the longer term. So this is creating a lot of pressure on the funding part. I don't think it's about asset quality. It's all about the funding part, which is probably in the hands of the RBI to fix. And I think the way we are positioned as government spending starts again in the run up to the elections, we should see some liquidity coming back into the system and some pressure easing off.
Okay, just on that point we were making about, stocks to buy rather than buying vehicles, someone's messaged me saying that they won't buy a Mercedes, but they'd rather buy a landmark cars because, that's the stock that deals
Premiumization theme playing out there.
Premiumization theme, and maybe, in a couple of years, they can just buy their own plane. I don't know how things are going to go from here. But Mir, coming back to the here and the now, right? One theme I wanted to talk about was technology because, companies like KPIT Tech, companies that are doing a lot of work in AI, in generative AI, are doing pretty well right now. KPIT Tech just yesterday spoke about how they're very confident of achieving their full year guidance, the raised guidance. So what do you do in a space like this? Which are the companies to pick and which are the ones to avoid?
So in tech, I think there is a clear difference between the large names and some of the specific mid-cap names. And that's what's playing out. The specific mid-cap names have niches which they are able to exploit, and they are still too small, so small that they can continue to grow at a superior rate in those niche segments also. The larger companies are having a problem in the sense that they are so big that incrementally to gather that order book for 10 to 15% growth is becoming, a bit of a challenge. So I would be very stock specific in the IT sector, and there is a lot of exciting work happening in the mid-cap space, I would say.
All right, maybe we leave it there. Thank you so much for joining us. Great conversation as always,
Thank
and thank you for coming in on short notice. Thank you. Well, it's Mihir Vora with view on markets and how things are looking. Well, let's just take a quick look at where the index is at. We are at 21,500, which means that there has been a sharp pullback from the day's lowest point. The market, I think, was down almost at about 21,448. We've pulled up about 50-60 points from that level, almost back in the green now as far as the Nifty is concerned. Pull up this stock, Azad Engineering. I mean, I think the news was, and I just looked up, by the way, it's moved up to being the top volume gainer across the NSE. They've won a contract from Rolls-Royce to make, engine parts. Rolls-Royce makes aircraft engines, and they've won a contract on the defense side to make aircraft engines. So that's the big one, which is moving up. Let's talk about, actually, I don't think we've ever mentioned this right at the word go in the first 10-15 minutes, but there you have it, a completely new name. And in the last 2 days, it's up about 37-38%. That's the kind of move that we've been, those are the kind of moves we've been having. The other one, for example, is Shakti Pumps, right? I think 40% in 2 days, and today it's seeing a small cool off. The last I checked, it was down about 1.5-2% or so. So not lacking for excitement, not lacking for large moves in this market at all. Even though the Nifty it's actually turned into the green now after being down 70 points, 21,522. But we got the first management with us. Nigel, take it away.
Well, let's focus on Blue Star. The numbers were rather strong for the company. Record revenue growth, healthy margin expansion as well. We have with us Mr. Advani, the Managing Director of Blue Star, who joins us on the show. Hi, Mr. Advani. Good morning, and thanks so much for joining in. And first of all, congratulations on a very, very good showing. I was just looking at your Q3 numbers and comparing it with some of the peers. You have grown in style. You've grown close to around 36%, which is much better. Even for the first 9 months, you've grown much better. This I'm talking about in the RAC segment. And you've been telling us that that target is to get to market share of around 15%. Could you tell us what is the updated number? By the looks of it, you've gained quite a lot of market share. And do you think you're closer to that 15% odd mark?
Great. Thank you so much for having me. Appreciate it. Let me just talk about the overall numbers, and then I'll come to the room AC business. So revenue grew 25% in the quarter, as you said, aided by our segment 2, which is both room air conditioners and commercial refrigeration, which grew at 35%. EBITDA was very positive. We got to 155 crores, which is about a 48-50% growth. And PBT, we were able to deliver 134 crores. Actually, this is the first time in the third quarter, which is usually a slow quarter for Blue Star, that we were able to cross a PAT of 100 crores. So I think we're headed in the right direction. Coming to the room air conditioner business that you talked about, you're right, we had a very strong quarter. Of course, revenue did grow 35%, so we have improved our market share slightly. I think about 13.75% is our estimate. I do want to say that the industry has done well. So, of course, we've done slightly better than the industry, but overall industry has been very strong. You know that it was a weak summer, and I'm very happy to say that, we've come back strong after a very poor summer. So I think a lot of it is sort of pent-up demand that was not fulfilled in that period, which has come in Q3. Margins also, we are able to hold up, slight drop from last year, 7.4% to 7.1%. But I think that we had anticipated because comparative conditions are, of course, quite extreme. But I think overall, a very well-delivered quarter for us. Thank you.
Okay. All right. Mr. Advani, I had a couple of questions on the margins then. The EMP business margins, that looked very, very good. Was there any one-off in that one? Point number one. And point number two, on the unitary products business, the growth was good, but operating leverage didn't really play out. Could you explain that to us?
Sure. So in segment 1, you saw profitability grow from 7.1% to 8.2%. I think that's what you're referring to. Revenue growth was also reasonably strong, about 18% to 1,182 crores. So that was not anything one-off. I think all our businesses in segment one have delivered, whether it's our projects business. We had a very strong quarter for commercial air conditioning. We're very happy with the progress we're making there on the product front. Of course, our international businesses are a little smaller right now and will take more time to deliver results maybe in FY 25-26. Our service business continues to be very stable. So I think all around, a lot of focus on cost management, and we did get operating leverage there. Segment two, you have pointed out rightly that operating margins were at about 7.1%, slightly lower than same time last year. So on the positive side, we've had stable raw material costs. We've had stable foreign exchange. We've been working very hard to take out costs from our products and bring better priced and lower priced products to the market without affecting our margins. So I think that we could have done a little better, I agree. But I think what we're keen to do is to see that we were able to load all our channels appropriately for what we expect is going to be a very strong summer. And therefore, we did have to compromise a little bit on pricing. But I think looking forward, we continue to be positive on operating leverage and delivering a far better operating profit for all our segments.
Okay, so can you give us the blended margins? What would the blended margins be by the end of FY25?
So we've been indicating that we want to get close to 8.5% to 9% in segment two. I think we should be able to deliver about 8.5%. Q4, as you know, tends to be a big quarter, both in volume as well as in profitability. And so far, the outlook for the industry is very, very strong. We're well poised, so I think we should be able to deliver that number.
No, so 8.5% you said in segment two.
Yes.
I'm trying to understand overall. I mean, what would it be?
Oh, overall, so yeah, we have a lot of moving parts over the next couple of months. We've been indicating that, we want to see EBITDA go across that 7% threshold and then start inching up 7.5%, 8%. So we're on that track. I'm a little unclear right now how we're going to end the year on an aggregate basis, but we hope to cross that 7% if things go well.
Mr. Advani, hi, morning. Can you talk to us a little bit about what is the situation as far as competitive intensity is concerned in the REC market? Because that picked up immensely over the last couple of years, right?
Yeah.
So how's that looking now?
So, we've been talking about it with you for several quarters now. There's a lot of production coming online because of the PLI. Of course, our plant was commissioned first out of all the PLI investments, so we got online early. But we've had a number of competitors who have commissioned plants over the last few months. We expect more to commission over the next few quarters. So certainly there's going to be competitive pressure increasing. Our focus, as you know, it's actually quite simple. We focus on product development. We're trying to take out costs so that we have products that are priced correctly. We've traditionally been a premium player. We've come down to affordable premium. This year, whatever results you're seeing are largely delivered by our affordable product range. So what we've been conveying over the last few years is that as we bring down price points, we will do so without foregoing our operating margins, and we're showing you that. So I think we're executing a fairly tight plan. We are commissioning phase 2 of Sri City by March 31. That will increase our own capacity substantially, as well as for exports. So we are very much on our CapEx roadmap that we have planned, R&D investment, digitalization investments that we've talked to you about. And we think that in spite of the competitive intensity, we should be able to deliver the growth and the profitability numbers. I think what is...
Mr. Advani, I get that, but there'll be no pricing-led growth in that sense, right? For the next couple of years, I would imagine.
No, we're not seeing a lot of price leverage there. So it is all about cost and how efficiently all of us can deliver.
Okay, well, you have mentioned growth quite a few times with new capacities coming on stream. Give us a growth number. For FY25, what kind of a growth number should we look at? Very quickly, sir.
So 20% plus is what we've planned to deliver. Top line and hopefully bottom line better than that.
Okay, 20% plus. Got it. Thanks a lot for joining in. Appreciate your thoughts here. We'll take a quick break. When we come back, the big mover in trade, PB Fintech. We'll discuss their third quarter earnings. Stay tuned. Welcome back to Corporate Radar on CNBC TV18. The big stock of the moment is PB Fintech. The stock is up almost 10%, and it's after reporting a good set of numbers. First quarter that the company has turned profitable on the bottom line, that is the net profits, and also operational performance of PB Fintech has improved. It's a high base, remember, and despite that, it's a strong growth that the company has seen. Now, it's sitting at a fresh 52-week high right now. I think it's back at the IPO price. Okay, it's not a 52-week high. It's back at the IPO price. Okay, 1,019. But I think still a little bit off the... it's gaining by the minute. When I tracked it last, it's at about 950 or so, now 1,020. All right, let's get to the management and talk about the business. The total revenues are up 43%. Contribution margins are up 400 basis points. Yashish Dahiya, who's the Chairman and Chief Executive Officer, and Alok Bansal, the Co-Founder and Executive Vice Chairman, join us now to talk about their Q3 performance. Gentlemen, morning to both of you, and thank you for joining us. Mr. Dahiya, I want to start with asking you about the business itself. If you can just tell us, the next quarter is expected to be the strongest quarter seasonally. So in terms of premium generation, credit disbursals, what are you expecting? Can you share some numbers with us? And, what is the overall growth looking like? What do you see as the big triggers over the next 1 to 2 years?
First of all, thank you very much for having us here. I think let's just look at it with a little bit of time in perspective. Let's look at, 3 years. We went public in 2022, and thus, if you look at the numbers of 2021, which is the back of the numbers on which we went public, 2021, our revenue was about 800 crores. In the last quarter alone, our revenue was 871 crores. And if you look at the, year, we will probably be at about 3,600 crores, right? That is 4.4 times what we were exactly 3 years ago. Now, I think that is what is critical. When you look at digital businesses and how they are growing, specifically once they gather steam, they start to grow quite rapidly. And we've been growing at scale. And when we went public, we were not entirely small, right? We were quite okay. So as you look at the next 3 years, what should our growth rate be? If we've grown 4.4x in the last 3 years, maybe we'll be about 2.5x. Maybe it's 2.3x. But saying we'll be anything less than, let's say, 2x would seem kind of terrible, right? So I think 30+% growth rate should be pretty standard for us for the next 6-7 years. Now, when you look at the macro trends, India growing, young people, nuclearization of families, insurance under penetration, the health and term products that we focus on, the nominal GDP of India anyways growing at 12 to 15%, right? Again, a 30% growth does not seem like a lot.
So,
a base industry which itself is growing at 10-15%, growing at double of the industry does not seem like a lot.
Got it.
And, yeah.
Mr. Dahiya, if you're talking about a 30% growth, right, I understand that you're also interested in some new areas of business, whether it's in the payment space, whether it's in the insurance space. Can you tell us what are those new areas that you're looking at over the next 1 to 2 years, which could perhaps aid this growth further?
I want to be crystal clear so there's no confusion. We're not looking at new areas. We are only looking to strengthen our current offering, deepen our current offering. Ever since we've started, we've continued to deepen our current offering, our then offering. And this is just a progress into being able to control more and more of our customer experience. And that is essential because, and I think that is why scale is important. As we get scale and we have good quality of business, we add value to our partners and they can cooperate more with us in allowing us to provide better customer service to our customers. What does that customer service mean? It means better customer support, better claims assistance, better... and what does control mean? Control means having more and more data points, having access to more and more payment mechanisms, etc., being able to give more flexibility to our customers. All of those things we would like to build out. When we talk about our reinsurance brokerage project, what does it mean? It means being able to create better products for our consumers. And I think each one of these is just about strengthening the current business. I doubt if we would do anything outside of our existing business lines. We don't have any such plans.
Okay. All right, gentlemen, good morning. Great to have both of you here, and I hope we can make this a quarterly feature. And congratulations, I mean, I think to you and, of course, a lot of the shareholders who've seen the price, large price swings. Mr. Daya, if I can start with you. So 30% growth, you're saying, for the next several years on the top line is doable?
We would be very disappointed if that did not happen.
If you don't do that, yeah. So that's it's you're saying, so in that sense, 30% is, you describe it as a conservative kind of a way to look at it. Yeah.
Yeah, I would say that's par for the course. We would expect that to happen.
At the bottom line level, at a profit level, what should we expect on a CAGR basis for the next several years?
Bottom line, we haven't reached a point where you can look at CAGR and explain why. See, we have, every time we make 1 rupee of revenue, roughly 30 paise, after taking care of fixed costs, etc., flows to the bottom line. I'm talking about profit, right? So if we are growing at 30%, let's say, that automatically means roughly, 9% of our total revenue is starting the flow line. Now, that is a great way to think about how the profits would move, because the profits are moving on the base of the revenue, right? So incrementally, 6-7% every year for the next coming few years are flowing in additionally to the bottom line. And that is why the EBITDA margins will improve very rapidly. So there is no point looking at a growth rate, because this year we would probably do maybe 60-70 crores of profit. But if you look at the same business 3 years from now, we have guided that it would be about 1,000 crores of profit. So I don't think you can look at a growth rate yet. I think the important part is when the 1,000 crores is done, the profit part would still be growing at about 60% every year. So I think that is when we can start looking at PAT growth rates or PBT growth rates.
Okay. All right. Good morning, gentlemen. Nigel on this side. I recall we had a chat a couple of quarters ago and you all were very confident about turning things around. And the street has appreciated this performance. Now, this 1,000 crores of PAT, it comes in 2027, right? That's the guidance that you all had given.
Yes.
Okay. I had a two-part question on this. Your new initiative business, by when does it turn EBITDA adjusted positive? Point number one. And also, how does the ESOP cost come down? A couple of years ago, I think, or last year, it was around 600 crores, which is gradually expected to come down. So tell us about that.
So I think we don't have any immediate plans of breaking even on the new initiatives. The costs have been coming down gradually, and they will come down gradually. I think within the next 3 years, they should become break even. So by 2027, we hope that the new initiatives part is close to break even or irrelevant in the big scheme of things from either a profit or a loss standpoint. The ESOPs were awarded over a 5-year period. They were equal amount every year, but the way they get charged out is 45% of the 5-year ESOP pool gets charged in the first year, then 25%, then 15%, then 9%, and then 4%. So what that means is every year you see a lower and lower ESOP charge. So we were heavily penalized around the point of time of IPO, and we pointed this out that it is looking this way. But of course, that's the way it works.
Got it. Let's also get Alok Bansal into the conversation. He's been waiting by patiently. Alok, on Policybazaar, I wanted to know, the RBI came out with the recent guidelines on unsecured loans. Has it or will it have any kind of impact on Policybazaar's business?
It's got some minimal impact, to be honest. I think our focus in Policybazaar has been on unsecured lending, but not at a very, very low ticket size. Our average lending is about 3 lakh rupees per loan. So we do not see a huge amount of impact per se. But from suppliers' perspective, yes, they have become a little bit more cautious, and we are trying to work with more and more suppliers. So for the very short term, which is like this month and maybe next couple of months, there will be a small dip in the growth rate. So if we were growing at, say, X percentage, we may grow at 10% lower. But yeah, we don't really see it in a long-term weakness in the business model.
So can you tell me what that number is? What is Paisabazaar's growth right now? Say for the full year FY25, what are you penciling in? And if you're saying that there could be an impact, how much would you want to scale down your guidance?
No, so there's no change in the guidance, and it's not about FY25. I mean, for FY24, overall, it will still grow at more than 30%. It's just that, yeah, it would have grown maybe near 40%. Now it may grow more about 32%.
Mr. Daya, Bima Sugam, every time we talk to you, that comes up. So that is now kind of part of the calculations in terms of how that may or may not kind of scale and what may happen there?
Our objective is not just Policybazaar growing. Our objective is insurance in India should grow. And I think any government effort in making that grow will be fantastic. I think increasingly what I understand is Bima Sugam is going to make life easier for everybody, including us. Right? So I think it would help the entire industry grow. And whether it's ONDC, Bima Sugam, all of these are efforts that make the industry grow. And I think that would make all of us more successful at being able to give confidence to the consumer in buying more insurance.
All right. I mean, the way I see it, when it first came, it seemed, because it was a new concept, it looked like a bit of a threat. But as time has passed by, and I guess industry consultations, etc., have also happened, you're more sanguine about the role that would play. I don't know if I'm paraphrasing it correctly, but that's what it seems like. But in any case, thank you very much. Is that correct? You're smiling, Mr. Daya.
No, I usually smile because there's a particular characteristic of me. I don't forget everything I have said and whatever I believe. And the thing is, as times change, people start realizing what I was saying was correct. And but they themselves forget that, I was saying the same thing 1 year ago or 2 years ago. It happens all. I'll give you an example, right? When Info Edge invested, Hitesh told me, you should make 100 crores of revenue. So then I went back to him and said, we've made 100 crores of revenue. You asked us to make 100 crores of revenue. He said, when did I say that? So this happens all the time. So it's okay.
So, all right. So you were not worried. You're not worried. That's, I guess, then the way to put it, as you said. Thank you very much, Mr. Daya, for joining us.
Thank you.
Mr. Bansal, great to have you with us here on CNBC-TV18 as well. So that's PB Fintech, the stock of the day, with the very large move, 10% plus move that we have on our hands right now. KPIT Tech is the other one that we're going to focus on. The stock on the last couple of days corrected. But the performance of the third quarter has been good. Constant currency revenue growth is up both sequentially on a year-on-year basis. Deal wins are also up 20% plus in the third quarter. We have Mr. Sachin Tikekar, President and Joint Managing Director at KPIT Tech, joining us right now. Sachin, good morning. Great to have you with us here. Thanks for your time. It's been a strong quarter. So growth has come in at about 4.5% constant currency, Q on Q. But immediately, I think the question which comes to one's mind is, we just, for example, had the Tata Tech management with us. There we saw a very large ramp down by their second largest client. If you look at the largest player in the global EV ecosystem, Tesla, that is disappointed revenues. I mean, I think there is a bit of a scale down happening there, maybe temporary. So the question to you is this sustainable, the growth that you've done?
No, great question. The way we look at our business is the propulsion side, the electric vehicle part that you talked about is the propulsion part of our business, and that's the largest business. Having said that, bulk of the growth is also coming from software-defined vehicles and in-car experience and off-board services. So, all these three things put together, that's the composition of our total business. Speaking specifically about electric vehicles, there is a slowdown in growth of electric vehicles as compared to what we witnessed in 22-23. However, our business actually depends on building the production programs and not necessarily how many cars are produced at any point in time. So looking at some of the OEM commentary in the recent past, they have inventory and they want to make sure that they get rid of the inventory. So the production level may go down for some time. However, that doesn't impact our production programs. Our production programs working with them on electrification typically start 3 years in advance. So we are already working on some of the production programs for the SOP year 26-27. That work continue for us, and that gives us the confidence that we'll continue to see growth in this area in the foreseeable future.
So I think what the street really liked is the fact that you said you will be able to meet your revised higher guidance for the full year. But there are some brokerages that believe that given the kind of traction that you're seeing, you could even exceed your full year guidance for FY24. Is that a possibility? And what do you think the early signs of FY25 look like in terms of growth?
Okay, let me take one question at a time. As far as this year's guidance is concerned, we revised our guidance from 28 to 30% to 37% last quarter, which is unusual for us because we just do that in quarter 3. We now believe that we'll do 37% plus. So that's the confidence that we have in the current financial year. As far as the next year and beyond is concerned, we do see profitable growth coming our way, just based on the engagements that we have with our existing clients and the conversations that we are having with 2 or 3 other OEMs. So we're looking forward to exciting times ahead.
Okay. So now just one follow-up here. Europe has been very strong for you, but the US revenue growth has been kind of tepid. I think it's not just the case with your own business, but a lot of your peers are speaking about that as well. Where are we in the cycle right now as far as the US growth is concerned? And what's the trajectory you're expecting?
So if you look at year-on-year growth for us in the US has been healthy. It's in excess of 20%. So we are happy. You've seen some drop in quarter, which actually depends on different programs at any point in time. US compared to Europe, you're absolutely right, has been slower for us. We do hope there have been issues in the US, as you know, with some of the strikes. OEMs have overcome those issues. We believe that there will be growth for us in the US as well going forward. There are 2 reasons for that. One is our engagement with the passenger car OEMs is looking solid in terms of the number of programs that they have and our engagements with them. And secondly, more than 20% of our business actually comes from commercial vehicles, mostly on the truck side. And we believe that US is the large contributor towards that growth. So as we get into the next financial year and the year after, we think that we'll continue to see healthy growth coming from US.
Okay, all right. Hi, Sachin. Good morning. Congratulations on a good showing. Your margins have improved as well, and that's something that's heartening, and that's something the street has taken note of. What are the levels you'll have in store to improve from year on? And where does it get, say, in the next 2 years or so? Point number 1. And point number 2, deal wins, yes, they're good, 21% higher in quarter 3. But year to date, actually, it's a little bit lower. What's the pipeline?
So let me take the bottom line question first, and then we'll talk about the pipeline.
The margin.
So the margins part. Margins, yes, in the last 14 quarters, we have had consistent growth in our margins. And now we always wanted to make sure that we get beyond 16% in EBIT and 20% in EBITDA. We have reached those milestones now. However, what we have done in the past is we have always reinvested more in future technologies, and that's what is really creating tremendous value for our clients. We'll double down on that part and make sure that we stay ahead of the curve in terms of our investments. We believe that there is more profitable growth going forward. However, the application of the additional profits would go more towards R&D in future. So if that answers your question on the margins, I'll talk a little bit about the pipeline. You're absolutely right. There is a quarter-on-quarter growth in the pipeline, and we are happy with the pipeline that we have. If you look at year-on-year, what has happened is we work with a handful of clients, and when we engage with them in a strategic manner, our win ratio goes up substantially. So the pipeline may look more or less the same. However, our win ratio has gone up substantially. So that gives us confidence that we'll continue to see profitable growth in the next few years to come.
So you're satisfied with your margins, right, Sachin? Just want to confirm that. As of now, you're satisfied. The additional money that you'll get, you'll be reinvesting it.
Most of it, yes. We are very happy with the progress that we have made, and it just gives us additional levers to continue to make investments for future.
So just to wrap it up, Sachin, one of the things globally which is being talked about is that as subsidies, especially on the electric side, come off, and this is happening in US, it's happening in Europe, it's happening, of course, here in India as well, right? There's a bit of a boost initially, and then subsidies taper off with every new technology. How critical is that, and will we, as that continues to happen in the next few years, will that is that a large factor for in the push, or you think we've reached a stage where it's takeoff with or without government subsidies?
You're absolutely right. I think in some countries there is a takeoff with or without subsidies. I think there are environmental reasons and there are many other reasons to go the electric way. And I think we are reaching a point where there is enough now. I think there is the prices of the electrification will continue to go down over a period of time. And the cost of the electric vehicles will also continue to go down as all the OEMs reach critical mass. So there is no turning back now on electrification. There are always, year on year, you'll always see some ups and downs in terms of the number of vehicles being sold. Last couple of years have been really good. So compared to that, I think the growth may not be as much in the next year or two. However, if you take a longer term view, as more and more technologies come in play, electrification will become more efficient, number one, and number two, also more cost effective.
Okay, all right, and that's where you come in. Thank you very much for joining us, Sachin. Great conversation. Appreciate your time here on CNBC TV18. Stocks up, I think, at the day's highest point. Last couple of days have been a little down for KPIT Tech. By the way, the market, which was up 50 points at one stage, I think we've given up some of those gains and up about 20 points. So yeah, there you go. Already within the first hour, so much has happened. We'll take a quick, what we'll do is we'll get Shrikant Chauhan in with a quick view on technicals. Shrikant is with us now. Shrikant, good morning. On the index, is there a particular trade you would advise and any stock specific ideas?
Yeah, good morning, Prashant. I think, the markets are going to spend some more time within the range of maybe 21,600 on the higher side and 21,400. And most of the time ahead of the event, we see market range bound. But stock-specific activity is definitely going to rule the market. And in that case, I think oil and gas stocks are really doing well. From that space, we like Gujarat Gas, which is currently around 568, 567. The stock is consolidating, and it has spent a lot of time within the range of almost 550 on the downside and 565 on the higher side. But today it is holding above the levels of 565. So from here, the stock can go to the levels of 590 or 600. It's a buy at current levels with a stop loss at 550 on the downside. And the other stock which we like is Wipro, which is around some 480 levels. The reason is because bond yield is again down from the highs. And based on that, I'm expecting some pullback in IT companies, maybe some defensive bets the market will take. Wipro looks good at current levels around 488, 489. At 480, 485 with a stop loss at 465. Again, we are expecting 510, 520 on the high side.
All right, Shrikant, we'll leave it there. Thank you very much for joining us. We'll take a quick commercial break here. Commodities up next with Manisha in just a bit.
Welcome back. As promised, we're going to get you a quick handle on what's happening in the world of commodities. Manisha Gupta is here to give us the latest on that. Manisha, over to you.
Thank you for that, Sonia. Well, even as we thought that inflation was just about easing, look at the month of January in 2024, and many agriculture commodity prices actually have started to surge. I'll start with rice futures, and we're trading at a multi-month highs onto this one, trading at an 8-month highs right now in the international markets. So the rice futures are at a May 2023 highs. There are concerns about limited supplies. Remember, India is also looking at a weaker rice production this time around and export curbs as well, and that has been keeping the international rice prices on the higher side. Take a look then at the cocoa prices, and they are trading at a 46.5-year highs. So this is almost an all-time high that you are looking at cocoa prices in the international markets. In the last 12 months, we've seen the cocoa prices gain up by almost 88%, and the last 1 week actually also has seen very strong gains coming in. It has to do with dry weather risks, and that has led to worsening of crop situation in Western Africa output. Remember, that is the major producer there, and we are looking at price premium building up because of that. Not just cocoa, the coffee prices also have continued to run up. The coffee is trading at a 4-week highs right now. We have seen strong gains in Robusta and Arabica, both of these varieties, and the prices have gained up by 7.5% in the matter of last 1 year. The other commodity I want to talk about, and that's only traded in the international markets, is orange juice prices, trading at a 5-week highs. We did see prices hit an all-time high in the previous year, and we have seen prices gain up by 57% in the past year. But when you look at the month of January itself, it has seen stronger gains. Barring edible oils, perhaps everything else has seen strong gains come back into the markets. So while cocoa prices have gained up by 13% in January so far, coffee is up by 2.5%, orange juice prices gaining up by more than 2% as well. Within the agri-commodities, the sunflower oil is the major gainer, 3% of gains onto that one. Cotton in the international markets, as the demand comes back, has gained up by 6% in this month. And the major gains clearly coming back in case of sugar as well. 14% up for the raw sugar prices in the month of January alone, with the markets anticipating that this quarter further could see further gains in agri.
Tell me what to drink, Manisha. Coffee prices are up, orange juice prices are up, and now you're saying
tea has seen some decline.
But even sugar prices are up,
Yes.
so I can't even add sugar in my tea. I think water is good for me. Thanks for joining in. Let's take a quick break on that note. On the other side, we'll be joined by Ramesh Iyer, Vice Chairman and Managing Director at Mahindra & Mahindra Financials, to discuss their Q3 earnings.
Welcome back. We are waiting for the MMFSL management, the Mahindra Finance management. The stock is up almost 4%, so important result to track. But as we wait for the management, let's talk about the other big number, which is Larsen & Toubro. That stock is reacting to its Q3 earnings, reacting a little in the red. Vivek is here to tell us why the market would be disappointed. Go ahead, Vivek.
Well, good morning. That's right. So earlier today, we had highlighted about how, despite the fact that, order inflow, for the quarter gone by has been extremely robust. Along with that, the management also in the media call yesterday told CNBC-TV18 that they have gone ahead and increased the order inflow guidance from what was earlier 12% to now over 20%. But however, what's actually been a bit of a miss has been the core margin. So the core business margin, first the company at the start of FY24 had a 9% target. After that, they trimmed it, and they expected it in the range of 8.5% to 9%. And yesterday, they trimmed it further downwards, now expecting to end FY24 between 8.25% to 8.5%. This is slightly disappointing as far as the street is concerned, because the street has been anticipating that the execution of earlier, legacy projects should now come to an end. And next quarter onwards, there should be a bit of a bounce back as margins are concerned. So that has been delayed, and that is something that has caused their stock price to take a bit of a hit. However, what the management indicated was that now we are talking about the ordering activity. Domestic ordering activity next couple of quarters expected to remain subdued, given the fact that the pre-election, the election code of conduct comes in. However, they said that as far as Middle East is concerned, ordering activity continues to remain quite robust. And in fact, we did quiz them about, when they could expect this Hafania project. They said that, at this point of time, it largely depends on when Aramco decides to award that particular project. Order pipeline remains quite robust. The only blip as far as the performance is concerned has been the margin, and which is why, a lot of analysts have trimmed their EPS estimates for FY24.
Okay, thanks a lot, Vivek. Got that, and the stock is reacting to those margins. But the one that's reacting positively is M&M. So let's talk about M&M Financial Services. Surging in trade today, up 3.75% as I speak. Q3 earnings came in above street estimates. Their asset quality has improved. Disbursements have also surged, but the management has lowered their guidance, especially on ROA, return on assets, the target of 2.5%, which they had originally said in FY25. They admit is tough to achieve. Ramesh Iyer, Vice Chairman and Managing Director at MMFSL, joins us. Good morning, Mr. Iyer. Thank you very much indeed for joining us. Well, first up, your margins actually are better than the previous quarter. Of course, lower year on year, but from 6.5 to 6.8, how did you manage that despite the rise in costs and the rise in risk weights?
No, so we had said this in the previous quarter because we had already put in some actions very clearly. One of them, of course, was to increase the lending rates to an extent, and that's come in on the new disbursements. Two, we've said that the product mix is slightly undergoing change, and the high yield products like the pre-owned vehicle is growing for us, and that would kind of to some extent improve the margin, was two. And the third was there was some fee-based income coming in through the insurance distribution, etc. And I think all three put together has added to a little increase in our margins from a 6.6 to a 6.8.
Okay. Disbursements are up very strongly quarter on quarter. You can maintain this pace. What is your expected disbursement growth or even AUM growth for that matter for the next year?
I think we've said it all through. 20-25% growth is not too difficult. The market is very positive. Sentiments are continuing to be strong. Footfall is high. The cash flows on which these markets depend, all of them are doing well, whether it's the tourism, whether it's the infrastructure, the farm cash flows have been good. So I think overall things are going pretty well for us out there. And we are very confident that maintaining this kind of a disbursement growth or an AUM growth should not be a challenge. And therefore, we are holding on to our F25, what we had committed in F22.
Okay, now, Mr. Iyer, you have to help me understand this because your disbursement growth is 11% quarter on quarter, but the AUM growth is far subdued. It's about, 2% quarter on quarter. Why is it so different? And let me tell you where I'm coming from. There was a Reserve Bank guy who had once explained to me that if disbursements grow so much, but AUM doesn't change, then probably there is evergreening. This was in another context, in another company altogether, but this worry can be there with others.
No, so let me be very clear. Ours is completely secured loan. We are a wheels business, and therefore the disbursements are for vehicle acquisition, tractor buying, etc., etc. And the rundown of the portfolio is little faster. So if you had the past portfolios which are maturing, they are little larger than, because they will be maturing in 3 years' time, 24 months, especially if you're on a pre-owned car. They are a 18 months, 24 months product. So therefore, the loans maturing are also at a faster pace, and that's why they don't add up to AUM. But as otherwise, there's absolutely nothing else. The disbursements are purely for vehicle and tractor acquisition. And then the rundown of the portfolio, which are maturing, is causing that the disbursements are higher, but AUM aren't.
Most helpful because that would clarify, at least answer the skeptics. Okay, now let me come to the other problem that I had. Your profit has surpassed analysts' expectations because you have provided less. Now, your expected credit loss of previous quarters, you have actually written back. How come you have so much confidence?
So it's not about confidence, it's about what's the reality, right? I mean, if you see our gross stage 3 numbers, they have come down. They have come down from 4.3 to 4. And the net NPAs, the net stage 3 has gone to 1.2, which was 2.4 the previous. And therefore, you get this natural benefit of it coming down. The second is, if this reducing trend is due to either repossessions or settlements, then you won't see this benefit in the P&L. But they are all purely by collection. And therefore, the account which was in stage 3, through collection, if they move to stage 2 or stage 1, then you get the provision benefits rolled back. I think that's what is causing this, and there's nothing other than that.
Okay.
So the overall collection efficiencies are pretty good in that market. And you can see month on month, we are putting out that number. We have trend all through the year upward of 95% or so, which is a very, very healthy collection efficiency given the cash flows of rural market. We have always witnessed first half goes through the pressure and the second half brings in the correction. But things seems to be changing because the infra cash flow, the tourism cash flow, which are more stable as compared to farm cash flow, is really helping that.
Okay, no, that's good to hear, but I'm not the only person getting a bit of a doubt over this, lower credit cost or lower provisioning. I see that also in a Nomura note. What they point out is that normally you measure provisions, expected credit loss as a percentage of exposure at default, right? ECL divided by EAD. Expected credit loss as a percentage of exposure at default. For you, it is now as low as 3.8. Shriram Finance has kept that at 6.2, which means they are being way more cautious than you. Would you still not say that you are being a little more, shall I say, confident?
I think we are pretty confident. You look at 1 year back, our GS3 number had gone to as high as 14%, 15%. And we had said that these are delays and not defaults. And we continuously see them come back. And you see every quarter, our GS3 numbers have continuously come down. I think the other factor to very clearly see is that the stage 2 numbers are also remain stable or come down, which means the forward flow is not happening, which is another very, very healthy news. Therefore, if you look at between stage 2, stage 3 together, they're sub 10%, which was never historically the number. And 90% of our accounts are in stage 1. Put all of these three things together, I think that speaks volume about the asset quality improvement.
Okay, that's very good to hear, absolutely, even for the sector as a whole. If you can see that with, the confidence and even put it in your numbers. While on that matter, just one issue, Ramesh Iyer, you all are not expressing your GNPA in the RBI format. You're using a Ind AS format. If you had used the RBI format, how different would it have been?
I think it would be probably 1% higher than where it is. So the 4 would have looked like 5.
Okay, the GNPA would look a little high.
Very important to see that the total provision that is required under the IRAC norms are lower than what we are carrying as an Ind AS provision. That's a reason we don't require to make any additional provision.
Okay, got that. Now let me come to the growth that you see, the margins that you will see in the coming quarters. How much will the cost of funds go up, considering that money is still tight and the risk weights are higher?
So fortunately, on the liquidity front, no issues. We have sufficient funds available for a company like us, AAA rated. There has been no problem whatsoever. Clearly, yes, the cost of borrowing has moved up. It gone up by another 20 basis points in this quarter. Hopefully, we expect it doesn't go up any further going forward. And we are also resorting to as many products as possible that's available for an NBFC to borrow from. And therefore, we are also managing it well through the mix of funds. And most of our assets also qualify for the PSL borrowing. So therefore, we get some rate benefit if we resort to the PSL borrowing, which we have been doing. Putting all of this together, clearly the cost of borrowing, if you recall our past discussion, we were expecting around the festival time, the rates would come down, but that was not true. And then it continues to remain, and therefore we are not able to make a statement about when will the rates come down, but we are hopeful it has to come down in F25. And that is something that we will wait for the further margin improvement. But at this stage, the rates do remain elevated. And that's a fact. And that's a reason our borrowing costs, lending rates have also gone up by at least 20-25 basis points.
Okay. And therefore, your guidance for margins would be?
So we think that by March, our aim is to move it towards 7. Our commitment, if you recall, F22 that we made for F25 was to reach 7.5. I think that looks a little distance away. We may be 7.2 or so once the borrowing cost comes down. I think what we have to do in terms of product mix in our borrowing, what we have to do in terms of lending rate increase, or what we have to do in terms of product mix change in our product lending products, I think we have done most of it. Now, if for it to go beyond 7, we would expect that even the borrowing cost has to come down, and we do hope it happens in F25.
Oh, yes, we all hope that, but it's simply not happening. Banks are simply competing for deposits at a higher rate. Mr. Iyer, where do you see demand? You're quite confident about the AUM growth, the clip at about 20%. You yourself in your numbers show that tractor demand is not very good. Shriram Finance in their numbers showed that personal vehicles was not very good. Like you, they've done extremely well in commercial vehicles. So if personal vehicles and PVs and tractors slow down, do you foresee any problem? Is 20 a tough target in FY25?
One is, of course, I'm expecting that OEMs will also push up the price in FY25. So for the same volume, the disbursements could be better. I hope 2 or 3% gets contributed in AUM growth through the price increase to vehicles happen. But I think as far as tractor is concerned, I still believe that the haulage application tractor will continue to do well. It's the farm application which has done enough as much as it should do. I think with the construction activity, the infra activity going on in full swing, and we're seeing that in construction equipment side, the demand on construction equipment side, and therefore the haulage application of tractor should do well. While amongst all the vehicle family put together, tractor being one of that, probably tractor would grow lower than the vehicle part. The second is, given our deeper penetration, a long relationship with OEMs and dealers, etc., we are seeing market share gain amidst competition out there. So we're also betting on our ability to retain market share at where we are and even grow it a little more. And the last of the product where we see a lot of traction is the pre-owned vehicle. Now, the new car segment may be going through some pressure and a single-digit growth, etc. But on the pre-owned vehicle segment, we are seeing phenomenal demand. And actually, the dampener was a non-availability. With all finance companies repossessing less vehicles, the supply side was a constraint. Clearly, that would continue to be. I think the exchange programs are doing well at the dealership, so that should push up some supply. But I think pre-owned vehicle is something that we would bet on for our growth as well.
Okay. Very quickly, sir, last question I'm trying to squeeze in. Do you expect any support at all from RBL, since the group has some stake in that bank? Are you getting any synergies from them at all?
No, we have our own business to do. We're very different markets, so not on the business front, surely. But, we would want to look at every bank, not just any one particular bank. And as you know, we have already put out our co-lending arrangement that we are working with SBI, co-origination with Bank of Baroda, etc. So I think these are market opportunities. It has honestly nothing to do with who's got what stake where. But these will be purely looked at as market opportunities and nothing more than that.
Got it. Thank you very much and all the very best for a great FY25, Mr. Iyer. We are not wrapping up on Bazaar just yet. Cutting to the Prime Minister, he's going to address the media ahead of the budget session.
जो पहला सत्र हुआ था, उसके आखिर में इस संसद ने एक बहुत ही गरिमापूर्ण फैसला लिया था और वो फैसला था नारी शक्ति वंदन अधिनियम। और उसके बाद 26 जनवरी को भी हमने देखा किस प्रकार से देश ने कर्तव्य पथ पर नारी शक्ति के सामर्थ्य को, नारी शक्ति के शौर्य को, नारी शक्ति के संकल्प की शक्ति को अनुभव किया। और आज बजट सत्र का आरंभ हो रहा है, तब राष्ट्रपति द्रौपदी मुर्मू जी का मार्गदर्शन और कल निर्मला सीतारमण जी के द्वारा इंटरिम बजट एक प्रकार से ये नारी शक्ति के साक्षात्कार का पर्व है। साथियों, मैं आशा करता हूं कि गत 10 वर्ष में जिसको जो रास्ता सूझा, उस प्रकार से संसद में सबने अपना अपना कार्य किया। लेकिन मैं इतना जरूर कहूंगा कि जिनको आदतन हुड़दंग करने का स्वभाव बन गया है, जो आदतन मैं इतना जरूर कहूंगा कि जिनको आदतन हुड़दंग करने का स्वभाव बन गया है, जो आदतन लोकतांत्रिक मूल्यों का चीरहरण करते हैं, ऐसे सभी माननीय सांसद आज जब आखिरी सत्र में मिल रहे हैं तब जरूर आत्मनिरीक्षण करेंगे कि 10 साल में उन्होंने जो किया। अपने संसदीय क्षेत्र में भी 100 लोगों को पूछ ले, किसी को याद नहीं होगा, किसी को नाम भी पता नहीं होगा जिन्होंने इतना हुड़दंग हो हल्ला किया होगा। लेकिन विरोध का स्वर तीखा क्यों ना हो, आलोचना तीखी से तीखी क्यों ना हो, लेकिन जिसने सदन में उत्तम विचारों से सदन को लाभान्वित किया होगा, उनको बहुत बड़ा वर्ग आज भी याद करता होगा। आने वाले दिनों में भी जब सदन की चर्चाएं कोई देखेगा तो उनका एक एक शब्द इतिहास की तवारीख बन करके उजागर होगा। और इसलिए जिन्होंने भले विरोध का किया होगा, लेकिन बुद्धि प्रतिभा का दर्शन कराया होगा, देश के सामान्य मानवी के हितों का कंसर्न दिखाया होगा, हमारे खिलाफ तीखे से तीखी प्रतिक्रिया की होगी, उसके बावजूद भी मैं अवश्य मानता हूं कि देश का एक बहुत बड़ा वर्ग, लोकतंत्र प्रेमी सभी लोग इस व्यवहार की सराहना करते होंगे। लेकिन जिन्होंने सिर्फ और सिर्फ नकारात्मकता, हुड़दंग, शरारतपूर्ण व्यवहार ये जो किया होगा, उनको शायद ही कोई याद करे। लेकिन अब ये बजट सत्र अवसर है, पश्चाताप का भी अवसर है, कुछ अच्छे फुटप्रिंट छोड़ने का भी अवसर है। तो मैं ऐसे सभी माननीय सांसदों से आग्रह करूंगा कि आप इस अवसर को जाने मत दीजिए, उत्तम से उत्तम परफॉर्म कीजिए, देश हित में उत्तम से उत्तम अपने विचारों का लाभ सदन को दें और देश को भी उत्साह और उमंग से भर दें। मुझे विश्वास है, आप तो जानते ही हैं कि जब चुनाव का समय निकट होता है तब आमतौर पर पूर्ण बजट नहीं रखा जाता है। हम भी उसी परंपरा का निर्वाह करते हुए पूर्ण बजट नई सरकार बनने के बाद आपके समक्ष लेकर के आएंगे। इस बार एक दिशा निर्देशक बातें लेकर के देश की वित्त मंत्री निर्मला जी हम सबके सामने कल अपना बजट पेश करने वाली है। साथियों, मुझे विश्वास है कि देश नित्य प्रगति की नई नई ऊंचाइयों को पार करता हुआ आगे बढ़ रहा है। सर्वस्पर्शी विकास हो रहा है, सर्वांगीण विकास हो रहा है, सर्व समावेशक विकास हो रहा है। ये यात्रा जनता जनार्दन के आशीर्वाद से निरंतर बनी रहेगी। इसी विश्वास के साथ फिर आप सभी को मेरा राम राम।
Okay, that's a very important takeaway from the Prime Minister's kind of welcome to the new session. He's pointing out that it is going to be an interim budget and so it will be largely directional. Disha Nirdeshak is the word he used. So perhaps there will be more announcement in terms of the direction in which they will take the economy and policy making. That's important. The second important, of course, is a big warning to the opposition to behave itself and to welcome constructive criticism. And a third one, laying his importance to the Women's Reservation Bill, Nari Shakti Adhiniyam, as he put it, and pointing out that the President and the Finance Minister are both women. Well, only on that issue of Nari Shakti, I guess CNBC-TV18 is a bit ahead of the times. Well, on that note, we wrap up on Bazaar. Chartbusters coming up.
Co-presented by